Producer Jamie's shooting this note over. Here's the quote, Tom. Beyond short covering, it is the exodus from bonds that is fueling equity buying. With Tina, there is no alternative.
Yeah.
Unaltered. More upside pain is possible given low hedge fund positions and bearish sentiment. But post the big leg up in rates, the focus will soon shift to, drumroll, earnings.
Yeah, I will. And Julian, was it Julian Emmanuel that was with us that says with Ed Hyman, they're at 9% earnings growth this year. That's terrible number. John, you know, there's a lot of systemic risks out there. There's the pandemic and all. I'm looking at the drawdown right now on a small index, the Standard & Poor's 500, and it's a shocking negative 3.5%. I have real trouble identifying a bear market when I look at a log weekly chart. None of the textbooks would call that a bear market.
I'm looking ahead to something else. Next week, April 6th, a hearing planned by the House Energy and Commerce Committee, and the big energy players are attending it. This going into earnings season, this with crude in at around $100 a barrel. This is going to be absolutely fascinating. Lisa, that is must watch next week.
Especially because there was another hearing that was scheduled, and then a lot of the oil major executives backed out. Basically, their feet are going to be held to the fire for possibly juicing prices or passing on too much of some of the increases in costs to consumers. How much do lawmakers move back from that and try to support them as they need to produce more oil in the face of what's going on with Russia?
John, XOI off the pandemic bottom, it's only up 235%. All they got to do is come up with a drilling plan.
According to a person familiar with the matter, here are the names: Devon Energy, Exxon, BP, Chevron, Shell, and maybe even Pioneer attending as well. That is must-watch TV. April 6th, just around the corner. Futures.
They should have John Tucker from Bloomberg Radio on the deck.
Way to go.
I mean, John's filling up his Hummer. It's costing him $500.
Just trying to make a move here, Tom. Down about a third of 1%. I know, he's getting excited about next week.
Yeah.
I'm with you, Tom. It's exciting.
It's exciting.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The Kremlin says there's been no breakthrough in talks with Ukraine. A spokesman says work needs to be done after a meeting in Turkey. Skeptical members of NATO are evaluating whether Russia's promise to scale back military operations is a turning point in the war or simply a tactical shift. It's one of the biggest cryptocurrency attacks ever. Hackers stole about $600 million from a blockchain network connected to the popular Axie Infinity online game. They targeted what is known as the Ronin Bridge and drained Ether and USDC tokens in 2 transactions. The breach wasn't discovered for 6 days. The U.S. trade chief says it's time to ditch the old playbook when it comes to China. Catherine Tai says the U.S. should forget about trying to change China's behavior and instead take a more defensive posture toward the world's second largest economy. In remarks prepared for a congressional hearing, Tai blasted China for not living up to commitments. OPEC and its allies are expected to rebuff calls to replace lost Russian oil. Russian oil exports have plunged by a quarter since the invasion of Ukraine. According to a Bloomberg survey, the 23-nation group led by Saudi Arabia will probably ratify plans for another modest production increase when it meets tomorrow. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio. Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question.
Great question.
Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions. The jobs report last month beat estimates.
We have a very tight labor market. It is pretty clear.
Historic recovery in our labor market.
One of the best labor markets in a generation.
This Friday, Tom, John, Lisa, and Mike will bring you the data and analysis as the numbers cross the Bloomberg.
More people are coming into the labor force. It's going to decelerate the wage gains. Is that good?
As the Fed looks to contain inflation, it's really important that the jobs recovery continues.
The March Jobs Report, Friday on Bloomberg Television and Radio.
I don't read anything into it until I see what their actions are. We'll see if they follow through on what they're suggesting. But in the meantime, we're going to continue to keep strong the sanctions. We're going to continue to provide the Ukrainian military with the capacity to defend themselves. And we're going to continue to keep a close eye on what's going on.
Distrust and verify the approach of this administration to Russia right now. President Joe Biden there from New York City. This is Bloomberg. Futures are around about 0.25% lower on the Nasdaq 100, down 0.4%. Yields are higher by a basis point or so, 241. The curve a bit steeper through much of this morning after going into inversion. An inverted 2s10s curve yesterday got all the excitement for the best part of about 25 seconds. Euro dollar 111.33. Positive on that currency pair, Tom, 0.4%. Inflation data out of Germany in about 40 minutes. I've had a lot of restaurant suggestions for Frankfurt, Tom. I think we offended a few people. So
I'm shocked.
What I will do instead of apologising is ultimately we will make the trip to Frankfurt and catch up with the ECB soon, Tom, and we'll do a tour of restaurants.
How generous of you.
Somehow Madame Lagarde can get on the phone and get us a reservation.
TK will tell you, Tom, how many times have we been and how many times have we failed to find somewhere to get a decent lunch?
It is to be beholden, and then a short lunch is an hour and a long lunch is 3 hours.
Down.
I'm just saying, I'm just talking about my experience.
Yeah.
What about cats?
Let's not talk about cats.
Let's not talk about. We're going to do the sports report at the end of this block, so please stay with us on radio and television worldwide. Right now, Emily Wilkins, and she knows if you're in LA this time of year, there's one trip east of San Francisco on the Nevada border, Mammoth Mountain, where the most expensive gas prices on the planet. Mammoth Mountain, $6.49 per gallon. Emily, don't tell me about Speaker Pelosi in Mammoth Mountain. Tell me about Washington in Mammoth Mountain. How's a gallon of gas going down?
I mean, look, the gallon of gas is at the top of the mind for every politician in Washington, D.C. right now. If you're a Democrat, it's worrying you very, very much because you have a midterm election coming up and Americans are not happy about those higher gas prices. We are starting to see Democratic leaders start to talk about what, if any, legislation they can wind up moving to reduce some of those gas prices. You're hearing a lot. I was talking with lawmakers yesterday. They really do mention a lot of those oil and gas companies, that they really think that they are doing things things with prices, that they're jacking them up, that they're keeping them artificially high. That's part of what the hearing next week is going to be getting into. But they're also looking at potential other measures. You've heard some senators mention things on biofuels. And I think this is something that lawmakers just really realize that they need to focus and double down on right now.
Dear President Ford, I enlist as an inflation fighter and energy saver for the duration. I will do the very best I can for America. Whip inflation now. Is that where we're heading, Emily?
I mean, look, when you talk about inflation, both sides have kind of dug in on their talking points here. Republicans, surprise, surprise, they're just saying they're going to be spending less money than the Democrats currently have. When you talk to Democrats, they really try and move the conversation away from inflation. Again, they know that that's something that's going to hurt them in the upcoming elections. And they say, look, what Americans really want is to have their costs saved. And we're going to figure out ways, lowering prescription drug prices, lowering health care. I mean, they've got a bill coming to the floor on Thursday that's going to cap the price of insulin at $35 per month. And I mean, that's the sort of thing Democrats are trying to pivot to right now, saying, look, maybe we can't bring that inflation number down by snapping our fingers, but we can pass legislation that'll save Americans elsewhere.
Lisa, page 312, ManQ. The only way to bring inflation down is to slow down the economy. Thank you.
That's exactly where I was going to go, how we spin the report on Friday when we get the payrolls report for the month of March. And Emily, how much is the White House looking for a really strong number to basically say, look at how great everything is, versus signs that perhaps some of the dynamism that has driven some of the inflation is cooling a bit?
I mean, when it comes to job numbers, this has been something that Democrats have really just held on to tightly. They've really used them as trying to argue the case that the economy is not doing as bad as the inflation numbers might seem, but they know that those inflation numbers are absolutely an issue. I'm interested to see if the White House is going to try and tie this in at all to that COVID-19 funding bill that's currently being debated in the Senate. Remember, they wanted to get those millions and millions more out there for treatments related to COVID, for preparedness if another variant comes along. So far, that legislation has been stalled. We haven't seen too much movement on it at this point, but you do wonder if a weaker jobs number is going to lead the Biden administration to spin it in a way saying, hey, look, we still need to be cognizant of COVID-19. It's still out there. Hey, Congress, where's that funding request?
Emily, thank you. Emily Wilkins. Tom, looking ahead to Friday before we get there, the ADP report. ADP 450K is the estimate.
Yeah, and again, I don't know what to do with ADP. I never have known what to do with it, but it does kick off what is a very, very early report. Again, it's the first Friday of a month, and correctly, that's April 1. But often, John, it's delayed a week. And this is a really early report. And, John, I would say just as importantly, it dovetails onto the ISM numbers you pay attention to.
Yeah, looking ahead to the economic data through the week. Futures at the moment down about 0.25% on the S&P, down 1/3% on the NASDAQ 100. We'll talk about rates with ING in just a moment. Tom, talk to me about the importance of what is happening right now with the space station, the International Space Station, and Russia's role in this big effort.
Well, they don't care about sanctions. They don't care about Ukraine. It's about getting people home safely. We are doing this now in Russia with 2 cosmonauts and an astronaut from the United States of America, Mr. Vanden Heye. And what's important here is they do the land landing in Kazakhstan, which is how the Russians do it. And it's of great importance. I've always been uncomfortable with this, John. The idea of landing in water to me is somewhat comfortable. I know I'm wrong on that. Everybody who's into this would say, Tom, you don't know what you're talking about. But that's the Russian distinction, John, landing on land.
Tom, can you go through how the US and Russia have worked together more recently and how that's going to work in the next few years?
This has been a group effort, not just involving Russia, but within space, the EU, and members of the world community. Everybody's climbed on board. I think the biggest problem here in a knowledge base, John, is we underestimate in our romance for Apollo 13 and at that time, the technology advancements. You see that with Musk. You see that with Bezos. But the big thing here is the idea of the technological advancements that have come from a global effort, not just a NASA effort.
And Russia's role in all of this. Prime Minister Boris Johnson speaking at the moment, Tom. Here's the line from him in Question Time. PMQs over in Parliament in the UK. Inconceivable to relax Russia's sanctions if there's a ceasefire. So, Tom, the Prime Minister saying what we all thought yesterday is that ultimately, even if there is a ceasefire, it is inconceivable to relax sanctions on Russia.
Stephanie Baker's great article today, absolutely definitive on sanctions, makes it clear Johnson leads the way.
Futures right now down about 0.25% on the S&P. A little bit later this morning, we get some ADP data in America, a jobs report ahead of the main one. Payrolls Friday just around the corner. Before we get there, some inflation data out of Germany expected. We'll break that down and what you can expect very shortly. From New York, this is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
About 2 hours away from the opening bell. Typically, I'd run you through the price action, but Tom, we start this moment in Kazakhstan.
It's Kazakhstan, and John, the helicopter's coming in. We just observed on the break, folks, a huge plume of dirt come up. And, you know, Jeff Bezos and Elon Musk are doing this, landing in Texas and other points. But I still think, John, it's very, very foreign. Of course, John, if there's a windy year, there's a wind that comes up. Instead of landing in Kazakhstan, they may land in northern Macedonia, which, you know, is a feasible thing.
Oh, boy.
Let's go to the soccer report and dovetail it in right now. Portugal 2, North Macedonia 0, and the Tots on Sunday coming up against Newcastle.
The only reason I'm still speaking right now is because I'm paid to. If we were anywhere else, I wouldn't.
He'd walk off.
Where else,
this is
John?
for the audience too. I'm going to talk about
where
markets.
else can you go from Kazakhstan to Newcastle and the Tots?
Only with you, Tom. That's for sure. Nowhere else, and with nobody else, for that matter as well. Let's get back to the markets. Futures negative on the S&P 500. 4-day winning streak. We're looking to snap it just a little bit softer by 0.25%, down about 0.4% on the Nasdaq 100. Into the bond market, 2s, 10s, and 30s. Yesterday, just a little bit of an inversion, 2s versus 10s. We're back away from that. The curve a bit steeper this morning, with 2-year yields lower and a 10-year yield just a little bit higher. 2s down 3 basis points, 10s up around about 1. The move in Germany is amazing. The 2-year yield closed out February at about negative 50 basis points. We are 50 basis points higher, just like that. And some really interesting inflation data just around the corner as well. Tom, will it even have a 6 handle in Germany, or for that matter in Europe, in the next couple of months? Does that become 7? Well, the hope that it would fade is not matched by the data we're seeing out of Europe at the moment.
And it's very clear those numbers are unimaginable. Is this fiscal expansion worldwide? And of course, now with the overlay of the war effort, you're going to have a huge impulse of money involved.
Euro dollar, want to watch here. Now, the way I think about this, intuitively, and I think we all think this way, is that if inflation's too high and the ECB comes in, they start to do something they haven't done in more than 10 years, which is hike interest rates, you start to think about a stronger euro. Euro dollar reclaimed to 111 handle. Thanos Vankakidis of Bank of America came out this morning on this show, and Lisa wasn't talking about 115, 120. He said 105. And he said anything the ECB does will be outdone by whatever the Federal Reserve does. And ultimately, and this is something you and I have been talking about for a while now, is that central bank action into weakness means a weaker currency and not a stronger one.
That's an important distinction at a time where he even does expect the ECB to act, to hike rates, and it will not matter, especially given the fact that stagflation concerns very much on the table and much more so in Europe than in the U.S.
I still can't believe Tom went from Kazakhstan to North Macedonia.
Really?
Just to,
can you really not believe that?
Just to have a dig at the Italian national football team. Okay, that's the cross-asset price
3 helicopters
action.
on the ground now in Kazakhstan. I can see it here, Jeff.
You keep us up to speed. Remain can't wait. Morning, Remain.
Hey, good morning, guys. Well, the longest winning streak, active winning streak in the S&P 500 looks like it may come to an end. Of course, we're talking about Apple on an 11-day run. They saw it add about 19% to its market value. The share is only down about 0.4% here in the pre-market, so we'll see what happens over the next 8.5 hours. That could turn around. We should point out that most of the other big weightings in the S&P are lower as well, including Tesla, Nvidia, Amazon, and Google. So keep an eye on those names. That'll be a big determinant as to whether we actually do end up seeing some green a little bit later here in the session. We should point out, despite the big run that Apple has had, there are about 30 plus other companies in the S&P 500 that have actually rallied harder than Apple over that time. Micron is one of them. It's up about 18% since its year-to-date low on March 14th. It reported earnings yesterday. That's given a boost to the shares here, up about 4% here in the pre-market. And Devon Energy, the biggest gainer in the S&P 500 last year, on pace for a 37% gain so far year-to-date as of yesterday's close. Could add another percentage point to that based on the pre-market movement here. I'll flip it up. Keep an eye on the ADRs of a lot of those Chinese tech companies. Every time investors over there seem to think that regulators are maybe easing a little bit, they get a reminder that they're not. The Chinese government basically saying it could crack down on some of the live streaming services. Bilibili down about 3%. And yes, Tom, you just mentioned Chewy. I'm not sure what's going on in the Keen household, but Chewy shares down 14% after reporting earnings.
Let's be honest, Romaine. This is something everybody knows about that has dogs, and the answer is it's not going well. Who puts them out of their misery?
The dogs?
No, not the dogs. The company.
Oh,
Romaine, that was.
I don't know where you're going.
I think we should wrap up this segment and wrap it up quickly.
God.
You want to put down dogs, Tom?
No, I want to know who's going to put Chewy out of their misery. They're not getting it done. Right. Romaine with more on the close. We're sponsored by the American Kennel Club. Romaine Dustin, thank you so much.
You'll be telling everyone to eat lentils soon as well, won't you?
Poor Garvey here to save us right now, head of global debt and rate strategy at ING. And like we need peace on Bloomberg surveillance, Garvey, always writing a smart note, talks about how we are making peace with higher yields. Porek, I love that phrase. How do we come to grips with higher yields?
Oh, we got to go higher still, Tom. There's a lot of room here between where yields are pitched and where inflation is. This is an incredible period right now. I think it's actually a great opportunity for central banks to move into that space, and the pressure is on for them to match what the market has done. But the market's not finished yet. It looks like this market can at least have it go with 3%, and the longer term Fed is something similar. And I think one of the things that we've got to look for here is that as we're on the way up, and it's remarkable how flat the curve is so early in the rate hiking cycle, as we're on the way up and we've just begun, we're already talking about the way down again.
Is that an appropriate conversation? Are we getting way out front?
Well, both are appropriate. Going up makes full sense. Central banks don't want to have rates at zero. The Fed certainly doesn't. The ECB needs to look at itself here and ask questions about whether it makes sense to have rates where they are. There's a tremendous opportunity to move rates well clear of zero. Interesting to see if they take it. Look, every time central banks have hiked rates historically, they've peaked for 7 or 8 months, then they've been cut again. So it makes perfect sense if we're talking about a fast uptick in rates from the Fed, which looks to be the case. It makes perfect sense to be talking about rate cuts because that's what's happened time and time again over numerous cycles.
Porek, a lot of people are looking at what the transmission mechanism is of these rate hikes, of these higher yields, and they keep looking at credit markets as being really easy and actually absorbing a lot of the rate hikes with some of the credit cushions compressing. How long can that maintain the case? How much can junk bonds remain a haven for many investors?
Yeah, Lisa, it's been a tough year for credit too. We started out this year with pressure on credit. It's morphed into a bond market, a classic core bond market sell-off. And you're right. I mean, credit has been a bystander here over the past couple of weeks. But if you look at the big picture, spreads are wider. They've come in. There is pressure for spreads to go wider still because what will happen going forward is that credit will begin to worry about the eventual slowdown in the economy. So it's still a widening pressure. Total returns in credits are still worse than total returns in U.S. government bonds so far this year. It's not been great for credits either so far.
When does it become a financing pressure, given the fact that so many of these companies have extended maturities and don't have to refinance for a long time?
Yeah, so it's been very difficult on primary up until recently, especially for high yield. It has eased over the past couple of weeks. The market has taken this well so far. What I'm not seeing at the moment is a frantic dash for the need for cash. You've got to remember that corporates built up trunk loads of cash last year. They got very cash rich. The next phase was supposed to be an M&A phase. There's a bit of a pause on that. But there's no mad issue there in terms of financing. This market doesn't desperately need a fully functioning primary market, although it has come back.
Porek Garvey there of ING Financial Markets. The focus overwhelmingly on this yield curve inversion. Deutsche Bank just put out a note. It's actually quite interesting, just going through some of the data they've put out. I'll put that out on Twitter in just a moment. The market continued to rally after the curve inflected. In all 6 cases they look over, it took another 3 to over 25 months for a market to reach its peak. On average, the S&P 500, Tom, returned 19% from the day of the curve inflection to its next peak.
Yeah.
That from Deutsche Bank this morning.
Yeah. That's out there. That's in the zeitgeist here. And again, it's not that I'm pushing against a gloom, John. I'm just pushing against a certitude of analysis, given how unusual these times are. And not only the news, Ukraine and the news and the rest of it, but John, the makeup of sectors, the separation of the S&P 500 into apparent relative winners. And John, what percentage of the S&P 500 is basically cratered? It's a big number.
There's some big moves, Tom, beneath the surface, and that's the snapback we've seen for some of the tech names as well, Lisa. They were badly beaten up, particularly at the start of the year. you saw that through January. That was the story, really, of January, this massive correction, this big move higher in yields, and ultimately the breakdown in some of these big tech names, too.
And frankly, the fact that they've all rebounded so much, you do wonder how representative the stock market is of the economy and whether it's the least representative of the actual underlying economy than it's been in years, given the fact that Apple is what? 8% of the S&P 500 and 11% of the NASDAQ? I mean, are we talking about some kind of reflection of economic trajectory in the U.S., or are we looking at Apple?
Just hearing from another governing council member over at the ECB, too early to say whether the ECB will definitely lift rates in 2022. It's likely that there will be a rate hike this year. Asset purchasing is no longer needed for the economy. It feels like, when you listen to this commentary at the ECB, that there's something like 6 to 9 months behind the conversation we were having at the Federal Reserve. Elisa, wind it down, and it's not going to be wound down, QE, for the ECB until the third quarter.
Yeah, although how much do they start to talk about those rate hikes as a likelihood? And do they realize that they're getting behind the curve? And more interestingly, watch the euro. Does the euro strengthen on the prospect of a potentially a European ECB rate hike? Or does it weaken because, frankly, they're behind the curve?
German inflation data 20 minutes away. We need to talk about Washington. We can do that with Greg Valliere of AGF Investments. Looking forward to that conversation very shortly. From New York City with Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. Futures down a couple of tenths of 1%. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. In the UK, the cost of living squeeze for consumers has gotten worse. Prices in British shops rose this month at the fastest annual pace since 2011. The report by the British Retail Consortium suggests that the war in Ukraine is now accelerating inflation. The BRC said shop price inflation was 2.1% this month. The UK's official rate is already above 6%. Keeping you up to date with news from the U.S. warns that Ukraine's capital, Kyiv, remained under threat despite Russia's promises to scale back military operations. A Pentagon spokesman called the Russian move a repositioning, not a real withdrawal from the areas around the Ukrainian capital. Moscow is likely to focus on taking control of 2 eastern provinces. A team of U.S. investigators is headed to China to help determine what caused that China Eastern Airlines Boeing 737 to crash. The group includes experts from Boeing, the FAA, and the National Transportation Safety Board. The jet plunged from its cruising altitude of 29,000 feet. 3 key indicators of Russia's oil industry declined in the second half of March. According to data seen by Bloomberg, Russia's average crude output dipped below 11 million barrels a day. Crude deliveries to the nation's refineries were down 11%, and exports to key markets slumped by a fifth. Many of Russian oil's traditional customers are looking elsewhere. And more than half of Americans may have never had the coronavirus, and scientists wonder whether those who have avoided it might actually be immune to the virus altogether. Experts say studying those who have not yet caught COVID may offer clues on how to attack it. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
Everyone you meet in Port Harcourt has stories about what they call black soot, caused by the manufacturing and consumption of these fuel products in the illegal refineries.
Oil theft, known as bunkering, and the refining of its spoils is worsening the damage from decades of fossil fuel exploitation, creating one of the world's most severe ecological disasters.
Our sacred forests, our homes have to give way to oil wells, and no one gets much benefit.
Imagine a resident of Port Harcourt who inhales this soot every second in 24 hours, 7 days a week, 30 days in the month, and for years now, we are dying slowly but surely, and our lifespan is reducing every day.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Well, you always keep the door open for dialogue, and that is sometimes the beginning of an end, but I would be very skeptical when I hear what they're talking about, that Ukraine is willing to be a neutral, but also wants guarantees from some of the other countries.
Kay Bailey Hutchison there, the former US ambassador to NATO, following yesterday where there were some hopes about a diplomatic breakthrough, the Ukrainians talking up the prospect of a meeting between leaders, the Russians saying they would sharply cut back operations in and around Ukraine's capital, and then international skepticism, and even from the Russians themselves. This morning, the Kremlin, Tom, the main headline from them,
Yes.
and Dmitry Peskov, no breakthrough in the talks, much work still remains.
There's no question that was a lead headline this morning, and not much market reaction, and ebb to the market movement that we've seen over the last number of days. But then life goes on. A quick image here of the reality of the space station returning to Earth, 2 Russians and an American, and maybe a quiet symbol here in this terrible war of life going on. I believe this is one of the Russian cosmonauts. A little bit of sun glare, no doubt, on the land in Kazakhstan. One glimmer of hope within this terrible, terrible war. Right now, on the Zero Glimmers of Hope in Washington, Greg Valliere joins us, Chief U.S. Policy Strategist at AGF, with a must-read morning note. And John, it's amazing how Mr. Valliere twists it over to a study of selected progressives.
Well, Greg, we've also got to talk about the prospect of whether this president goes for a second term. Greg, have you already made a call on that?
Well, privately, I haven't put it in writing yet. We're a little early, but I've got to tell you, John, I think he's a one-term president. I think the Democrats take a severe beating in November, not over Ukraine, but just over urban crime and inflation and all that stuff. So after this beating in November, I think the party will panic, and they'll begin to ask the question, do we want to have a president whose second term would end when he turned 86 years old? I think that's a deal breaker.
Right.
Who makes that call, Greg? Who makes that call?
He does. I think,
exactly.
I think he's a pro. He's been around. I think he makes that call. I think he realizes that it's time for fresh blood in the party. Actually, it's time for fresh blood in both parties.
Greg, a very important point then. He has to move to the center. The budget moves to the center. How does the center receive the ball? I mean, how does the center Democrats handle the coming months of this battle?
I must admit, Tom, I was a little surprised yesterday that his budget didn't get a few more compliments from the center. He's going to spend a lot more money on defense, more money on police, and even more money on border security. And he didn't get any congratulations at all for a clear move to the center.
Greg, given your projection that this is going to be a one-term president and that, frankly, the Democrats are going to get hammered in the midterm elections, does that mean that any fiscal spending, that any expansion of the budget is off the table? What other policy prospects are you kind of removing from likelihood over the next 6 to 12 months?
Really good point. I think, first of all, any kind of big new tax hike is out of the question. We're not going to get that. Joe Manchin pretty much has said that overnight. And secondly, I think the rate of increase on spending will slow. God forbid spending would actually drop. That's not going to happen. But the rate of increase will slow, and that is still another, olive branch to the center.
Well, an olive branch to the center, but it comes at a time when people are growing increasingly worried about recession. How much does this really shape what kind of potential response there would be if there was some sort of material slowdown in the next 12 months, as a lot of people in the market are expecting?
Well, I think there are some things you can do to stimulate the economy. Maybe he'll do something on student loans. Maybe there will be more gasoline tax breaks. I think you'll see that in a lot of the states. Maybe there'll be pressure, jawboning on the Fed to ease up, to take their foot off the brake. But there's no panacea here, Lisa.
Greg Valliere, give us the calendar now. I think for so many, including myself, for so many viewers and listeners, it's almost April. In a midterm year, frame April, May, June, July, and beyond after Labor Day.
Well, first of all, Tom, they're on vacation a lot. They take a lot of time off. I think the idea that we're going to get a big new tax bill, so complicated, I think that's very unlikely. They'll just do the basics, the budget. But the big wild card, obviously, is going to continue to be Ukraine. If we should have a miraculous ending to Ukraine on the battlefield, maybe that helps Biden. But on so many key issues, from Afghanistan to inflation to urban crime, Biden is in real trouble.
Greg, let's talk about where some of that trouble can come from. It's not just about an unwillingness, perhaps, to shift back towards the center. It's how to energize the progressives. And Congresswoman Ocasio-Cortez came out with a big complaint in the last 24 hours. Greg, how do you think that shapes things?
Well, the thing is, Biden should realize, the Democrats should realize, that the progressives have utterly failed on all of their agenda. No defund the police, no Medicare for all, no wealth tax. The list goes on of things they've sought that they failed on. So the idea that Biden should try to ingratiate himself with that faction of the party, to me, makes no sense. He's got to move to the center and stay in the center.
Greg, isn't that the problem with the party right now, is that most outsiders, commentators like yourself, would turn around and say, this is the situation. He was meant to go down the middle. He went too far to the left. He needs to come back to the middle. But within the party, you've got progressives that are saying he didn't go further enough to the left. They're not on the same page at all, are they? Now, when you compare them to the Republicans, yes, there is a fringe group in the Republicans that a lot of people do not like, Greg, and they're taking the party in the wrong direction, especially for Republicans who have been members of that party for a long, long time. But, Greg, do you sense they're on the same page in a way that the Democrats just won't be when we get to the end of this year?
No, I don't. It's a really good point, John. I think that the biggest risk for the Republicans is that they overplay their hand on issue after issue, gay rights, abortion, a wide range of things. And then we see more and more scandals erupting around Trump. So I think that the biggest enemy for the Republicans is themselves. That could be self-inflicted wounds.
Greg Valliere, a really important final point. Thank you, sir, of AGF Investments. Tom, the risks for both parties, particularly the Republicans at the end there as well.
John, I just looked up the percent registered of Republicans in California. That number used to be in the 30s, you know, a minority in a Democratic toned state. And then I remember the day it became 29%, and that was a shock. I've got it now published here at 24%. So, John, that's 5 divided by 29 is the decline just in the last couple of years. And I can do that on the Bloomberg terminal. I can go down and do the quick math on that, John. And the answer is there's been a 17% decline in registered Republicans over the last 4 or 5 years.
Well, Tom, what does that indicate? If you were a Republican and lived in California, would you vote?
It can cut either way. That's an important point. But I'm suggesting, as I think we heard from Mr. Vellier, that the calculus, this dynamic is not a normal midterm election. That would be my point.
A long year ahead.
Yeah,
Futures.
It's original.
Down 2/10 on the S&P, on the NASDAQ, down 1/3 of 1%. In about 5 minutes, we'll get some data out of Germany, some inflation data, and it could be a bigger number than expected. From New York, on TV and radio, this is Bloomberg.
Estudio, nuestro experimento, no hemos pintado todos los edificios de blanco, sino estos más asequibles de pintar. Y ya hemos detectado reducciones medias en el área metropolitana de 0,8 grados aproximadamente en un periodo de ola de calor y con picos máximos de 4 grados de disminución en un momento puntual del día, en una zona puntual del día. Y como dices, en una ciudad como Barcelona funciona incluso mejor que las zonas verdes, según las modificaciones, nos detectan incrementos, o sea, disminuciones de temperaturas mayores con tejados blancos que con incrementos de zonas verdes como tienen planteados el plan director urbanístico.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Crypto, you have a world of young people that want their own financial system and their own culture. And it is very powerful, and I'm a big believer in it.
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg.
market is still assuming that the Fed is going to be hiking interest rates really very aggressively.
The growth trajectory for this year is very strong, so they're very, very eager to front load these rate hikes.
If we're able to stave off recession in the U.S., you're going to get that earnings growth.
You really don't want to fake yourself out and get too bearish here.
People have gotten a lesson in diversification over the past few months, and I think they're going to continue to get one.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. A most interesting 8 o'clock hour into the jobs report on Friday. We've got ADP coming up here in 15 minutes. John, research, George Saravelos out of Deutsche Bank is adamant. Look for long euro. The inversion you've been talking about, the German 2-year going positive, means strong euro for Deutsche Bank.
And it means strong inflation, too, at the moment as well, Tom. We have a 7 handle on inflation in Germany. Largely predictable because we had the regional breakdown through this morning and we saw some big numbers from Saxony to Bavaria. And right now, Germany, inflation with a 7 handle. TK, this following Spain, close to double digits. The ECB has a little bit of a dilemma on its hands through this year.
It may be a different debate, but it means nominal GDP up, ISI, Ed Hyman, Julian Emmanuel at a 9% earnings growth rate. We're going to talk about that, John, with Troy Gajewski. But what is so important to me is the growth guess. Is it going to be growth stable, good, or growth miserable?
Well, for the policymaker, it's about the balance of risk, Tom. And downside risk to growth and upside risk to inflation is the story. That is an EM dilemma that the ECB now has to face, Tom. What do? You pick your poison. Maybe you move incrementally because you're worried about downside risk to growth. Perhaps that's the story, Tom. A small move, a rate hike by the end of this year. I think that's become consensus pretty quickly.
Lisa, May 4th seems far, far away, but Chairman Powell's got to look at that jobs report on Friday and a fully employed America.
And what we know and what we don't know, I'm looking at this German inflation rate, and what strikes me is that the median estimate was 6.8% versus 7.6%. The misses in terms of the economic forecasts are notable. We saw the same thing with the Spanish inflation rate, and we see the same thing here in the United States. It is hard to get your hands around what the inflation will be and get the predictions right. And given that, how much conviction is there behind some of the moves that we hear from the Fed, Tom, considering that they could potentially be also hiking into weakness that they can't even see yet?
John, we got to stop the show here. That's a real move, and we got to jump up in that yield of the German 2-year. This is the 10-year equivalent proxy maybe for Europe. John, we're going to go through that spike that we saw early this morning of 0.03 positive.
CPI in Europe, the estimate of the ECB for this year is 5.1%. The estimate for growth is 3.7%. And at the last meeting, they had to cut their growth outlook and kick higher their inflation outlook. Do they have to do that again when they put out forecasts in the summer? Their next meeting, April 14th. I think the pressure's building on the ECB, Tom, in a way that they probably won't want it to.
Bloomberg Radio, a spike up here in the yield. We get out to where we were at 3 o'clock this morning. We'll see if we break through that here in moments. John, let's do a quick data check here just because that's what we do on Bloomberg Surveillance. Equities give it back after that big 300 Dow points yesterday.
Thanks for that, TK. 4-day run on the S&P, 4-day winning streak. We snapped that with a morning of losses of about 1/3%. No drama. The S&P down about 13 points. Dmitry Peskov of the Kremlin coming out and saying no breakthrough in Ukraine talks. Much work still remains. So futures just a little softer. Yields higher on a 10-year at least by a basis point. On a 2-year, yields lower. So we've seen this curve steepness come through, Tom. Still, though, 2s10s at 7 after breaking through 0 very briefly in yesterday's session.
Dollar gives it back a little bit. Sterling resilient, 131.62. Right now, Troy Gajewski, Chief Market Strategist, FS Investments, joins us as well. Troy, it all devolves down to a growth call within currency dynamics, yield dynamics, and for that matter, stock market dynamics. What's the growth call overlay you have?
Well, yeah, so coming into the year, we were around 2 to 4% real. We shaved that a little bit, obviously, given some of the supply shocks to energy and food and some of the drag that'll have on the consumer. So I think the best estimate now is about 1.5 to 3.5 real. But to the point you guys were just making, I mean, nominal is going to still be exceptionally high given how inflation is. So we're looking somewhere around 7 to 9% nominal with upside surprise this year. So top line revenue should still be very attractive for equities, which will lead to substantial earnings growth, somewhere around 10% plus or minus. But against that, of course, you have multiple compression that's already happened to a very small extent But as the Fed continues to slow money supply growth through both the bank channel and potentially through their balance sheet, we would expect more like 2 to 3 turns of multiple compression and a very similar market environment to like we had in 2018, where despite reasonable growth, exceptional top line growth, you end up with a slightly down equity market, which is basically where we are today.
A pretty crazy ending to 2018, Troy. Are you expecting the same end to this?
You know, it looks like so far, I mean, it's always hard to predict what the Fed's going to do. It's even harder in an environment like this when, you know, you look at some of the things they've said, you know, in Q3 and Q4 about inflation transitory. And then, hey, guys, we're really serious about inflation. We're going to start hiking. But before we do that, we're going to expand our balance sheet by another $50 billion plus. But all that being said, it looks like they are learned the lesson from 18, and they're going to move very delicately on the balance sheet in order to avoid, you know, some type of more disastrous market outcome and really attack inflation through the bank channel, through lending growth. You know, you've seen a significant increase in lending growth recently. And in order to constrain that and in turn constrain economic growth, which in turn constrains inflation, you pay interest on excess reserves and you incentivize banks not to lend. So yeah, we don't expect a bloody ending to the year like we had in 18, nor do we expect the Fed to be able to do a U-turn, right? Because in 18, they could do a U-turn because they were hiking because of the threat of inflation, as opposed to now they're hiking because obviously we have these eye-popping levels of inflation. But it's going to be a sloppy, choppy, messy year. And after the recent rally we've had, which, you know, some are categorizing as a bear market rally, and the strongest rallies always occur in bear markets, of course, it's very hard to get excited about any type of risk-on trade right now.
Where are we in the economic cycle right now, Troy?
Yeah, it's a tough one. I mean, we're mid to late for sure. And then the question is, how much longer can the cycle extend through the tightening period? So, you know, if you look at the housing market, you look at consumer spending, those are arguably later cycle. That being said, if you look at CapEx spending and inventory restocking, we're still relatively early. So there's a lot of cross signals right now. We'd say we're highly confident that we can avoid recession in the next 12 months. But as we get through that, it's going to have to be an interplay between how sustainable can consumer spending be and how powerful are those kind of latent CapEx and inventory restocking cycles. So far, so good for this year. But we'll obviously watch the data very closely as we move into 2023.
Troy, how much is this the bet right now in the equity market? Basically, keep dancing because we still have 12 more months before the recession, and there's not a lot of other places to hide, especially as some of the havens that I know that you have enjoyed in the past, like Bitcoin, take it on the chin. How much are equities better than cash in an environment where cash is losing value at an accelerating pace?
Well, look, I mean, fortunately, there are far more alternatives these days to both equities and bonds. I mean, we had an exceptionally long period of excessive performance in both equities and fixed income relative to expectations, say 10 or 5 years ago. And so much of that was driven by, you know, just rampant money supply growth that gooses all asset prices, including bonds, including equities. And so, you know, we would prefer people to, you know, trim some of their 60-40 exposure, which fortunately some clients have done, and allocate to things that are enjoying the Fed's largesse, that are benefiting from the Fed hiking, whether it's senior secured commercial real estate debt, whether it's business development corporations trading at discounts to NAV that have all floating rate assets. You know, obviously in an ugly enough market, nothing performs well. But as long as we can avoid a pretty severe recession, you have a very good probability of generating, you know, a mid to low high single digit return. And in BDCs that trade at discounts to NAV, you know, that are paying 11% dividend yields, if you can enjoy that dividend for 2 years and plus get some pull to par, you can have a very exciting total return. So we would urge people to not fight the Fed in this environment, which they're basically doing in both bonds and equities, and high five the Fed instead and focus on things that benefit from Fed rate hikes as opposed to being terrified by Fed rate hikes.
You know, hating on the Fed's a sport, a national sport. Particularly on Wall Street, Troy. No high-fiving Chairman Powell. Troy Gajewski of FS Investments. Go on, Troy.
But no, I would say we are very supportive of the Fed. I mean, they have a tough job. They're really in a pickle today.
Who is this?
But, you know, you think about some of the things they've done in the past 6 months and versus statements versus what the data was saying. it doesn't. We're less confident in their forward path than we've been at any time.
That's more like it, Troy. Thank you.
Troy, you know, I got to ask Troy quickly here. You went to the Massachusetts Institute of Technology. They're bringing back the SAT exam. They said, okay, forget about that touchy-feely. We're bringing back the SAT. Is that a trend that you see coming?
Well, look, standardized tests, right, have always been important, we think, and I think most higher educators would agree, just to make sure that whichever students you're allowing into the school can actually handle the workload, right? Because the worst thing you want to do is have some very talented individual that might not be as good in math or science get into school and then struggle mightily and ultimately not succeed. So, you know, standardized testing has always been important just to level the playing field.
Yeah.
It's not the only thing that you should look at, but I mean, I saw it in my experience. You have kids get in and they're really talented, but the coursework is so much harder than anything you've seen in high school. And then they'd ultimately have to transfer out. So having standardized tests, we think.
Okay, John, what's great?
This is just my personal opinion. You know, I think.
Okay, well, thanks, Troy. That's great, John. At MIT, the minimum entries is $7.95.
Thanks for that, Tom. Where were you taking that conversation at the end there?
No, it's a huge deal.
Okay,
that's a huge deal.
Just seemed
huge deal.
Was this related to the Federal Reserve and Chairman Powell?
It is. They all took the SAT.
He can't pay for it because he's a triple leveraged on cash.
Okay. Futures are down a third. In just a moment, we get the ADP report. We'll bring you that and Tom's SAT score. This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. The Kremlin says that there's been no breakthrough in talks with Ukraine. A spokesman says work needs to be done after a meeting in Turkey. Skeptical members of NATO are evaluating whether Russia's promise to scale back military operations is a turning point in the war or simply a tactical shift. Germany has triggered an emergency plan to brace for a potential Russian gas cutoff. The issue, President Vladimir Putin insists the gas should be paid for in rubles. European countries call that a breach of contract. Now, Putin is striking back after the EU came up with a plan to cut dependency on Russian energy by 2/3 this year. Tesla found a way to dodge the global crisis in nickel, a critical ingredient in electric vehicle batteries. The invasion of Ukraine has led to a 30% increase in the price of nickel, since Russia is one of the biggest suppliers. But Tesla was out in front of the problem. It signaled deals with several nickel suppliers in the last year. That includes a multi-year agreement with mining giant Vale, which hasn't been announced. Corn is out and soy is in on American farms. That's due to skyrocketing costs of fertilizer, which is up 130% over a past year. A Bloomberg survey finds that farmers in the U.S. will devote about 2 million more acres this year to soy and about 2 million fewer to corn. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Companies now, they're getting hundreds, maybe even thousands of applications. So software has come in to automate the process.
You want to write your resume for robots, not for humans. The only job your resume has is to be comprehensible to the software that is reading it, because that software or robot is going to decide whether or not a human ever gets their eyes on it.
These things are programmed by a certain segment of the population that might not be totally inclusive or not be fully aware.
Concerns about how this technology could exacerbate discrimination. For the FTC, I think foremost, the FTC needs to be making sure that we're fully understanding this technology.
We don't trust companies to self-regulate when it comes to pollution. We don't trust them to self-regulate when it comes to workplace comp. Why on earth would we trust them to self-regulate AI?
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We have an upside surprise on the ADP report in the United States of America, a small one, but an upside surprise. 455K, 450, the estimate. The previous read, an upward revision, 486 from 475. Numbers out of ADP ahead of the payrolls report this coming Friday. The estimate there, 490K. I'll whip through the price action. We're down about 0.4% on the S&P. On the Nasdaq 100, down 0.6%. Yields now unchanged on a 10-year at 239.63, Tom. Just short of 240. Mike McKee with us as well. Mike McKee, pouring through the data. What do you see, Mike?
Well, you know, this is the most hated indicator on Wall Street that everybody trades. There's nothing else happening today, so you're going to maybe move the markets one way or another. But you notice it comes in pretty much in line with where you'd expect it to be for the idea of the Friday payrolls report. This is, of course, only the private payrolls, but it was broad-based, according to ADP, and that's the kind of thing the Fed and the markets would like to see. You had 79,000 goods-producing jobs, 54,000 in manufacturing, and remember there was a story a day or two ago about how manufacturers are having to turn down work because they don't have enough employees. They seem to be finding them. 161,000 people went back in the leisure and hospitality sector. So it looks like what the Fed thought would happen is happening, that as people's stimulus checks ran out and they started to need more money, they'd go back to work. And it'd be interesting to see the participation rate on Friday.
John, I note the 2-10 spread comes in a little bit. Do you think that's important? 7 beeps.
I mean, we got through zero yesterday, Tom. So we're down near those levels. Been there for a while now.
Okay, what we're going to do now is do central limit theorem with Michael McKee. We can do that on standard deviation. In Germany, as John has mentioned, horrific inflation, and it's out like a medical chart now. It's over 7 standard deviations of a boom up in German inflation. That is nothing compared to American housing. Michael McKee, the Dallas Fed, out yesterday with absolutely definitive research on this American housing boom. It's not even measurable within my standard deviation chart, 19% up on Case-Shiller. What does Dallas say about when this housing boom ends?
Well, they're raising a sort of red flag at this point, saying that prices are becoming, perhaps, in their words, unhinged from fundamentals.
An exuberance, Schillerian.
In a way that reminds them of the run-up to 2008. The question is, will this continue to where it gets dangerous for the financial system? Now, banks are obviously in a lot better place. We make a lot fewer of the subprime loans, but it is still a question, and it is pushing inflation up. I did a chart yesterday, didn't bring it along today, so you're lucky. But if you look at some of the recession-induced inflation, some of those numbers, like used cars, are rolling over, but housing is just a straight line up.
Okay, John Miller was with us yesterday on Bloomberg Surveillance on another property, and John Miller was adamant it's a two-part housing market. Do you in Dallas in your study look at it? Is the haves are buying ever fancier properties, et cetera, and the have-nots are just plain and simple getting pasted?
To a certain extent, it depends on where you are. Obviously, the distinction between haves and have-not in housing is going to be much different in the Midwest than it is going to be in New York or California. But the biggest thing that has influenced this, according to a lot of people, is the companies that are buying up, and Blackstone being one of them.
You think that's a thing?
Buying up houses to rent. Yeah, and it has created a shortage in available housing that helps push up prices as well. Interesting thing today, the Mortgage Bankers Association weekly mortgage index too. The number of people applying for new home mortgages goes down, but the number that really caught everyone's eye, refis, off by almost 15%. As rates go up, that market is killed, and that means less money going into the economy that people are going to spend. So that may be a sign that things will cool off a little bit as well.
Mike, the connecting feature here between both the labor report, the clues that we got out of the ADP report, as well as what we're seeing from the housing market, is when do we see some of the prices, some of the increase in inflation actually slowing these same trends? When does inflation cure inflation? In the housing market, we're seeing with the number of homes on the market dramatically declining, no inventory available, and frankly, the number of sales getting done also declining. On the labor market, as the participation rate goes up, does that mean that salary increases will go down as the supply of workers increases?
Well, that's what economic theory suggests should happen, Lisa, but we don't know yet because we don't have enough information. This is, again, a strange situation where we shut down the economy. A lot of people lost their jobs, not because their company had any problem, but because there was no business. Now they're coming back. Companies had to, in the beginning, offer a lot more money to get people over that COVID, I'm afraid to go back to work hump. Does that continue? That's going to be the real question out there, especially as we see the months go by and other factors such as gasoline prices, et cetera, start to influence people's decision-making behavior.
Mike, in a way, Chairman Powell is lucky because he's not running the ECB. President Lagarde has got a tough gig right now through to year end, hasn't she, Mike? What on earth should they do with inflation where it is and growth heading where it's going?
Well, she has the one advantage in the sense that her mandate is inflation, and so they're going to have to do something about inflation. And they also have such a low base rate at this point, negative 50 basis points for the deposit rate, that they can make some moves without really affecting the economy that may affect psychology. And that is going to be important. You look at the CPI numbers that are coming in today in Germany, as you said, John, North Rhine-Westphalia is 7.6%. That's something that has to scare the ECB, because at the same time, you've got this whole Russian gas story hanging over them. And what's the price going to be going forward? Fortunately, we're almost at summertime, but it is going to take a big bite out of their incomes. And that's a problem for the central bank.
And for Germany, specifically, on the day they took the first step in an emergency plan to grapple with potentially limited energy supplies, gas supplies out of Russia, Tom. This is a big, big issue. 7.6% CPI out of Germany. A tough gig for the ECB to know what to do here, Tom.
John, it's real simple. It's a fancy study, and on radio and TV, we're not going to do it right now. 7 standard deviations, John, is a scary, scary chart mathematically. There's a real fear in that tension.
And Lisa, they're still doing QE.
Yeah, that's just the irony, right? They're not only not tightening, they're actually continuing to ease at a time when they're worried about weakness in an economy. What can a central bank do if they're dealing with inflation we have not seen in decades? But there is that prospect of a weakening economy, and that is the conundrum none of them want to be in, and that is the conundrum that the ECB finds
And
itself
not just
in.
the prospect, though, is it? It's the reality.
Exactly.
It's the reality. The growth outlook is being cut by the day, Tom.
I love it that Mike McKee mentioned Westphalia, North Rhine, and all that. You know, it reminds me when Dortmund beat Northern Macedonia. They did it.
Why would Dortmund be playing Northern Macedonia?
Because because Germany's a powerhouse like Italy, and it was a friendly.
A friendly between a club and a country.
Yeah.
Do you want me to believe that?
Well, I don't know.
Would you like to clarify for the audience that you're just lying to try and wind me up?
I'm just looking there.
They're
Portugal too. Portugal got it done.
Even I have been having a domestic for the best part of a decade.
Yeah, it seems to be crescendoing.
Mike McKee has an exclusive interview with the Richmond Fed President Thomas Barkin at 10:30 Eastern. And when Mike McKee speaks to a Fed speaker, you do not want to miss it. It's coming up a little bit later. From New York, this is Bloomberg.
That it's highly transmissible. We know that 2 doses of vaccines, Pfizer vaccine specifically, neutralize the virus, but not as efficiently because various studies showing that reduction up to 40-fold, meaning that a 3rd dose is a must for it to successfully neutralize the variant. What we don't know is still that what are the effects of mix and matching between vaccines and what are the capabilities of antibodies produced from this mix and matching in neutralizing Omicron. Because as we know, many parts of the world use different types of vaccines. And that would be a great data to look at. It will be also great to look at, because majority of the studies done uses a small sample number, and most of the time when you translate it to real world, the data changes. So it will be really good to look at large-scale data of the ability of antibodies from vaccines to neutralize this variant. Grateful here today that the virus, Omicron variant, still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed with spike in mind still works. Imagine if it uses a different receptor other than ACE2. None of the vaccines would work today. So I think that is the best news that we got from all these studies which came recently, the past couple of days.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Some really strong data out of the United States once again, if you follow it. As Mike said, it's the most hated data point on Wall Street, but people still trade on it. ADP, 455, the estimate 450K, the previous number. A revised, a better revision, 486 against 475. On to payrolls, the estimate there, 490. In Germany, the data more concerning. It comes in with a 7 handle. CPI in Germany, this from the team, Tom. Inflation, the highest level since records began after reunification in the early 1990s. It's been a while.
Yeah, I don't have a chart here, John, but 7 standard deviations is absolutely untenable. Now, let's summarize here, John. It's about energy costs, and I guess it's a core statistic, so that doesn't matter. Tell that to the German people.
Yeah, and tell that to the ECB, because I think they're nervous too, Tom. That next meeting, April 14th, that news conference just got a little bit more interesting. Now, I say that relative to the fact that they're never interesting, but Tom, this one is a little bit more interesting.
What we've tried to do in Bloomberg surveillance through all of this in economics, finance, and investment in these unsettling times is speak to people who are authoritative on military, thinking of the generals, the admirals we've spoken to, and now on the nuclear debate. And of course, all of that having to do with fears of Chernobyl and the other nuclear plants across Ukraine. Ernest Moniz is our gentleman. He is the former U.S. Energy Secretary, but hugely associated with his decades of work at the Massachusetts Institute of Technology. We're thrilled that Dr. Moniz could join us this morning. I want to cut to the chase. How far out of line is Mr. Putin with the Geneva Conventions going back to the 19th century, prisoner of wars and all that, but with the Geneva and Hague Conventions that dealt directly with weaponry? How out of line is Mr. Putin?
Well, Putin's statements about threatening the use of nuclear weapons are, in fact, way out of line, as you say, Tom, and actually quite reckless. It is interesting that some of the Kremlin spokesmen have been trying to dial that back to what is the stated Russian policy, but clearly there's a lot of ambiguity, a lot of uncertainty as to what the Russian military would like to do if they are, in fact, bogged down in Ukraine, as they clearly are in various parts of the country. So it's a real setback in terms of this nuclear saber rattling, and let's just hope that they are not planning to use a tactical nuclear weapon in Ukraine.
Take us away from our amateur Hollywood stereotypes of the guy with a little black bag walking near President Biden, and we all look at it and know he's in charge of our nuclear capabilities. Does Mr. Putin have a guy walking around behind him with a little black bag with a red button on it?
Well, that's called the football, right? Yeah, the fact is that Putin, just like the U.S. president, has the sole authority to launch nuclear weapons. In the past, when our presidents in the United States have had some emotional distress, there have been attempts by others in the administration to dampen that authority, but the reality is we have sole authority, and we, by the way, feel very strongly that this sole authority should be really curtailed, except in the most urgent situation where you have no time for consultation.
Ernest, given the situation that we have and the imminent threat that a lot of people feel from Russia, how important is it for the world to remove Russia really from the oil equation? In other words, what do you think the U.S. ought to be doing to allow Germany to become independent from Russian gas?
Well, oil and gas are a little bit different, Lisa. In terms of oil, the Russians are clearly having trouble now getting buyers. So even though we are not sanctioning, there's a kind of a customer sanction going on, and that is affecting the ability of Russia to get oil onto the market, they are taking a big discount, $30 a barrel, for example, on their oil. But to be honest, I think in the longer run, and I don't mean years, I mean a month or so, I think the oil markets will basically recover in terms of supply side. Again, Russia will take a big discount. Now, gas is very different. With gas, you don't have the same kind of global market with cargoes easy to move around to different places. You have, in this case of Europe, obviously a lot of pipeline gas, which goes from A to B, and that's it. And now, of course, with the unrest, and even before the unrest, that is the invasion of Ukraine by Russia, gas prices in Europe and in Asia were going awfully high.
Yeah.
To give you a scale, in the United States, we're still talking about, say, $4.50, $5, which is high for us. But in Europe, they hit $50, $60 per million BTU. Extraordinary.
Yeah.
I spoke with a friend in the UK recently who said his gas bill for heating has gone up by a factor of 4.
And it's been a big concern, I know, for policymakers across the continent. I want to go back to what you were saying, where you think that the demand and the supply, frankly, will come back online when it comes to crude, not gas, that you think supply will recover within about a month. What goes into that? Is this the idea that sanctions will be lifted? Is it that the U.S. can increase production? Is it reliance on OPEC Plus?
Well, I think it's a little bit of all of that, but a major part in my calculation is that I think with the very, very large discounts, frankly, Russia will begin to find customers taking that oil. China will increase its imports. India is very interested in a big discount, et cetera. In addition, I think we are making some headway in terms of reestablishing our relationship with the Saudis and the Emiratis. They may push OPEC to slightly, at least somewhat more, increase the pace. And of course, in the United States, I think that the president meeting with oil and gas company heads and with the heads of major financial institutions is very important because, the financial institutions have been pressuring the oil and gas producers to focus more on returning cash to their investors rather than expanding supply. Well, right now we have a supply emergency in a certain sense. And I think it's time to do a little jawboning, if you like, and have the financial and oil and gas executives come together and recognize we do need some increase in supply.
Ernest, do you think that Jennifer Granholm is doing a good job as your replacement from many years ago?
Yeah, well, she's, I think, emphasized quite correctly and very strongly that we now need to start looking together at the climate and the energy security imperatives. And I think expanding that conversation out of the silos where some want to talk about climate, some about security, some about geopolitics, some about infrastructure. We need to have some about, of course, environmental justice, social equity, very important when energy prices are going up. And what we need is a coherent discussion across all of those areas. And they are in many ways synergistic. When you go to low carbon electricity supply, for example, that helps energy security. On the other hand, it's a bumpy road, and we're going to have some trade-offs as we optimize all of our objectives.
Mr. Moniz, I want to go back to our stereotypes. You mentioned silos, and that reminds me of 1964 and Dr. Strangelove. We all have frameworks of nuclear power. Maybe it's the tragedy of Japan. Maybe it's something else. If Mr. Putin has narrow, short-term, smaller nuclear weapons, what do they actually do?
Well, first of all, these so-called tactical nuclear weapons, we should not think of them as really small. We might be talking, say, 5 kilotons of explosive yield as a metric or a standard. Hiroshima was 15, but Oklahoma City, a chemical explosion, was 2 tons. So we're talking 5 kilotons. If that were dropped in a city, it would do enormous damage and kill a lot of people. So the question is, would the Russians follow a doctrine which is debated about whether a small-ish nuclear weapon dropped in a place that did not do too much damage relative to, say, a city, would that lead to de-escalation of a conflict or escalation? We think that the circumstances would determine that in ways that are very difficult to calculate. So our concern is that if this were to happen, the situation could get out of control through miscalculation, through blunder, misunderstanding, bad data, very, very quickly leading to a much larger nuclear conflagration. Obviously, very, very bad for everybody, very bad for human civilization, clearly. So it's very important, in our view, that that nuclear weapons continue to be unused and to be focused fundamentally on the deterrence value in terms of not being the victim of a nuclear attack.
Ernest, thoughtful stuff, deeply thoughtful stuff this morning. Thank you. Ernest Moniz there, the former US Energy Secretary. Futures are a little bit softer, lower, negative a third of 1% on the S&P. Coming up on the open in around about 20 minutes' time, David Costin, Tom, the chief US equity strategist at Goldman Sachs. Looking forward to this one. Year-end, his price target, 4,700 on the S&P. We're not far away, are we?
That's sort of a churn. I mean, I guess he's looking for a churn. It feels like we're like 2/3 of the way through the year. We're not.
We're not. We're about to wrap up Q1, though, Tom.
Yeah.
We'll do that tomorrow. Looking forward to being with you. Tom Keene, Lisa Bravis, and Jonathan.
He's gone.
Put something in a tank.
This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. U.S. Supreme Court nominee Ketanji Brown Jackson will get at least one Republican vote for confirmation in the Senate. Senator Susan Collins of Maine tells the New York Times a second meeting with Jackson alleviated her concerns, and she will vote in favor of the nomination. Brown is the first black woman ever nominated to the Supreme Court. The U.S. warns that Ukraine's capital, Kyiv, remains under threat despite Russia's promises to scale back military operations. A Pentagon spokesman called the Russian move a repositioning, not a real withdrawal from the areas around the Ukrainian capital. Moscow is now likely to focus on taking control of two eastern provinces. The world's largest commodities trader, Glencore, won't seek any new deals in Russia, but it will continue its valuable business ties there. Glencore just completed a month-long review of its operations in Russia. It says there's no realistic way to exit its Russian stakes. A team of U.S. investigators is headed to China to help determine what caused that China Eastern Airlines Boeing 737 to crash. The group includes experts from Boeing, the FAA, and the National Transportation Safety Board. The jet plunged from its cruising altitude of 29,000 feet. And Bloomberg's learned that Volkswagen has picked banks to be a joint global coordinators for the planned Porsche IPO. The banks include Goldman Sachs, Bank of America, and JP Morgan. More banks are expected to be added to the deal. The IPO of the famed sports car brand is likely to be one of Europe's biggest listings this year. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Lisa Mateo. This is Bloomberg.
city of Jamnagar is a money-making machine for Asia's richest man, Mukesh Ambani. His company Reliance has the world's biggest oil refinery complex here in the city. Jamnagar is also where Ambani is making his newest bet, a $10 billion investment in green energy. His ambition is closely aligned with the Indian government's plan to reach net zero emissions by 2070. But Ambani is not alone. India's second richest man, Gautam Adani, has committed $20 billion of investment over the next decade. But India's massive dependencies on fossil fuels have some environmental advocates questioning the realism and sincerity of those green ambitions and those of its two biggest billionaires.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
But ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
BSO Now is your online home for weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed archival concerts. Visit bso.org/now, where the music plays on. BSO season sponsor, Bank of America.
Just beginning to start to tighten at a time that inflation's way above their target and the unemployment rate is low at 3.8%. And Powell has characterized the labor market as extremely tight. In that situation, if you're going to try to get inflation under control, you're going to have to push up the unemployment rate. And if you push up the unemployment rate, it's almost impossible to avoid a recession at that point.
It has been a set of Bloomberg opinion pieces by one William Dudley, the former president of the New York Fed. A, he's been dead on about rising inflation and our need to adapt and adjust. And B, a new short essay which says simply, let's go. The only way is to slow things down. With perspective on this, Nora Rubini, Macro Associates, way too long. Nora, and of course, the Boombust.com co-CEO, associated for years with giving us wisdom. Nouriel, do you buy the idea that the only action that will bring down inflation is to dampen economic growth and increase unemployment?
Yeah, I have that same view. I mean, inflation right now is at the level we've not seen in decades. Break-evens are suggesting that inflation expectations are also rising. There is the beginning of a price-wide spiral. And the other thing that happens is that on top of everything else, a tighter monetary policy would slow down economic growth. But now we're facing with a negative supply shock that's coming from the Russian invasion of Ukraine that increases commodity prices, also slows down growth through global supply chain. So that trade-off becomes even worse before you put monetary policy into the picture, because a stagflationary shock, it's a negative supply shock, implies lower growth and higher inflation, everything else equal. And then them if you do and them if you don't in terms of monetary policy. If you care about inflation and anchoring inflation expectation, you have to tighten sooner and more. but that implies that the growth slowdown, if maybe even a growth recession, is more severe. And if instead you care about growth and then you normalize too slowly, you have the risk of de-anchoring inflation expectations. So that policy trade-off becomes even more severe.
Nouriel, you wrote an article recently that I thought was really insightful. Basically, it's the new stagflation policy proof. Where does policy fit in to the next year, 2 years, when a lot of people say recession is nearly inevitable as we try to come out of this period?
Well, again, you have a wide range of sets of policies. You have monetary policy, you have fiscal policy, you have sanction policy, you have a regulatory policy. You could introduce price-wage controls or indexation of wages to prices like we did in the 70s. The trouble is that you have a bunch of policy tools, but you have also a bunch of very contradictory goals. Your goals are to have price stability and push down inflation is now significantly higher, but you also have a mandate about maximum employment that goes against right now, given the negative supply shock, against that target. You want to keep interest rates low, long-term rates. That's actually a formal mandate of the Fed. And of course, higher rates are going to tighten financial condition. And then you want sanctions to punish Russia and deter other people from doing mistaken things. So all these things imply that reaching an optimal policy equilibrium is very hard, because suppose that you want to have more sanctions and you want to have more fiscal stimulus, sanctions to punish Russia and stimulus to try to support economic activity. Both sanctions and fiscal stimulus increase demand and increase inflationary pressure at the time where monetary policy is trying to instead achieve lower inflation. So there's almost a contradiction between the various policies.
So what do you see, Nouriel, as the likely outcome of this, as we do get this argument of whether a soft landing is possible?
I think it's going to be very, very hard for the Fed to achieve a soft landing. Historically, you have to tighten more than otherwise when inflation is this high. I think that the dot plot of the Fed is not realistic. Having a Fed funds rate is going to be more like 3 to 4%, means that monetary policy is not going to be tight enough. And then you have two choices. Either you really tighten monetary policy because you're still behind the curve, bull and right, you need a policy rate at 3% by the end of this year, in which case you cause a recession, or you wimp out because you're worried about growth and you're worried about the debt trap. Right. A situation where private and public debt is so high that when you raise rates, then you destroy the debt markets. And whether you wimp out because of worries about growth or about debt markets, they're connected, and therefore you may end up not doing as much and de-anchoring inflation expectations. So you have to choose between recession or de-anchoring inflation expectation. You cannot have a soft landing.
Nouriel, quickly here, I love to end this with you because it's always so constructive. You and I were in a bar once at Davos, and we were talking about 4 standard deviation moves as being a shock. German inflation is 7+ standard deviations. Italy reporting tomorrow looks like it's 6+ standard deviation move over the long-term disinflationary trend of Italy. What does the society do with that?
Well, as you point out, you are already very standard deviation away, semi-black swan events on things like inflation, not just in the US, but also in Europe. Of course, we've had also these major geopolitical shock, that is the war, and it's just a symptom of a much broader geopolitical depression. I think the next few years, China and its effective allies, Russia, Iran, North Korea, are going to challenge the US and the West. So I think that the war in Ukraine is only the first salvo of this Cold War 2.0. I mean, the question is not whether it's going to be a Cold War or whether eventually we're going to have a war between the West and China and so on. So we are in a very difficult situation where extreme things are happening. And like, on the eve of World War I, financial market, bond market did not price in at all the risk of a major war. And then stuff happens. So not only we have major events that are radically different, like a quantum leap, but we don't have the policy tools to address this.
Nora, I'll tell you what we're going to do here. We're going to continue on radio. We're going to bring this conversation over to myself and Paul Sweeney with Dr. Rubini. We'll do that here in a bit. Lisa, we got to go to it. Jobs Day on Friday.
Yeah, how much are we looking for a strong number as being a good sign? And how much are people concerned about a market that, frankly, even Jay Powell was saying is likely overheating in certain areas. I don't know. This is such a tough market to get your head around. And I keep going back to the misses in the inflation calls from economists from the U.S. to Europe, as we saw earlier this morning.
Well, the momentum there is extraordinary on inflation. Nominal GDP in America, fourth quarter, 14% plus. Stay with us. Sonora Robini continues on Bloomberg Radio in a moment. Mr. Costin of Goldman Sachs will be on television with Jonathan Farrow, Michael McKee, and Thomas Barkin later this morning.
Welcome back to another Miami Open update for Bloomberg TV and Radio from Tennis Channel. I'm Jamie Maggio. The joint Masters 1000 event hit top gear Tuesday at Hard Rock Stadium. Reigning U.S. Open champion Daniil Medvedev took out American Jenson Brooksby to reach the quarterfinals. The 26-year-old can return to world number one if he reaches the Final Four in the Sunshine State.
And he kind of just started. I mean, what I remember the first time I saw him was in Washington. So, yeah, he's a great player, so I knew it's not going to be easy. But, yeah, I'm trying to do the same as him, so I managed to do it better today.
And Naomi Osaka coasted into the semis with an impressive win over local favorite Danielle Collins. The four-time major winner will meet Belinda Bencic for a spot in the final. And don't forget, Tennis Channel's live coverage continues at 12:30 p.m. Eastern. I'm Jamie Maggio.
Energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables. Holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
Stocked early enough all these precious materials you were just mentioning, and we were on the lucky side that our prognosis was spot on in a way, forecasting what kind of material we would need and what quantity we would need.
The jobs data in America is decent. The inflation numbers out of Germany slightly worrying. We'll get into that in just a moment. Futures this morning, negative about 1/3%. Good morning to you all. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Live from New York City, we begin with the big issue. Hopes for a diplomatic breakthrough fading fast. Russia's promises meeting skeptical minds.
I don't read anything into it until I see what their actions are. We'll see if they follow through on what they're suggesting.
And the Pentagon echoing the president's sentiment.
We believe that this is a repositioning, not a real withdrawal, and that we all should be prepared to watch for a major offensive against other areas of Ukraine. It does not mean that the threat to Kyiv is over.
And now even Russia questioning progress, with a Kremlin spokesperson saying the following: "We can't report anything very promising, no breakthroughs. Very, very prolonged work is still ahead." Our team coverage starts right now with Bloomberg's Kelly Lyons in New York and Emily Wilkins down in D.C. And Emily, to start with you, is there anything to be hopeful about here?
I mean, we can be hopeful that there might be more aid coming for Ukrainians. We know that the White House is considering providing another $500 million for that. That request will probably need to go through Congress, but there's still a lot of strong bipartisan support. Look, if you look at where the U.S. is today, if you look at where Washington is today, there's no signs that anyone is changing their stance, hoping for a soon-to-be-announced peace or withdrawal or anything like that. Lawmakers are being briefed today, both in the House and Senate, from officials with the State Department, Defense Department, Joint Chiefs of Staff. There's still hearings on this. Lawmakers are still very much prepared to continue to work with this issue and see what ways they can continue to provide aid to Ukraine. And if they need additional sanctions on Russia, remember that one to end regular trade relations is currently stuck in the Senate due to Senator Rand Paul having a hold on it, but they are hoping to come to an agreement on that within the next week.
Kaylee, there was hope for a breakthrough. It looked like we had one. The equity market rallied this morning. We're down about 1/3%.
Yeah, the market certainly took that hope in stride yesterday. A big rally for stocks. What really was just one in a series of up days. The S&P 500 up 11% in just the last 2 weeks, but futures are in negative territory this morning. Not a huge loss. We're down about 0.4% or so on S&P E-minis, but you're also seeing a sentiment reversal in the commodities markets. Crude, after 2 days of pretty heavy losses, up 3.5% on WTI. We're back around $108 a barrel, and of course, not a lot of movement in the Treasury market. But what's different today that wasn't true yesterday is that the curve is steepening, not flattening. Of course, this is another thing the market has to worry about. For a very, very brief moment yesterday, the 2-year Treasury yield was above that of the 10-year. A very brief inversion, the first time since 2019, which can signal potentially a recession coming down the line. Of course, there is debate about that, whether this time is different given the Fed's heavy hand in the bond market. But looking at history, inverted curves always don't necessarily mean a bad thing for equities. Invesco notes going back to 1965, the median length of time between an inversion and a recession has been 18 months, matching the median stretch between the onset of an inversion and an S&P 500 peak. On average, the index gaining about 19% over that time. But a lot, of course, could depend on how aggressive the Federal Reserve is. If there's no breakthrough in Ukraine, does it exacerbate inflation, make aggression more likely, or does it make the central bank more cautious? I think that is an open question, John.
Kelly Lyons, thank you. Kelly, alongside Emily Wilkins down in D.C. Thank you to you both. Joining us now is Morgan Stanley's Lisa Shallett, Mike Schumacher of Wells Fargo. Lisa, first to you. Is there a reason to be hopeful here in this market?
I think we're skeptical of getting ahead of ourselves here with regard to hope. While we respect the amount of liquidity that's out there and the desire to quote unquote buy the dip after we saw a correction in the S&P 500 and a bear market in the NASDAQ, the reality is that risk has really fundamentally gone up. Whether you're talking about the geopolitical risks, as many of your guests have talked about this morning, or you actually focus on fundamentals. We continue to caution folks about the vulnerability of earnings here. And what folks have to remember is that the S&P 500 earnings are not the U.S. economy. And S&P 500 earnings are going to be very vulnerable to this mix shift between goods and services that we expect, because the index tends to be, dominated by manufacturers of stuff. And it's also an index that tends to be levered pretty largely to generating sales and profits in Europe. And to the extent that the German, IFO and the ZOO, numbers mean anything, the potential for a downturn in Europe or a severe slowing there seems quite high right now.
What a problem we've got in Europe. Mike Schumacher, to pick up on what Lisa said, the IFO, German Business Conference last week, collapsing. Their word, not mine. This morning, CPI. This is the line from the team here at Bloomberg. Inflation jumping to the highest level since records began after reunification in the early 1990s. We have a 7 handle on inflation in Germany, Mike Schumacher. So we've got downside risk to growth, upside risk to inflation, and Mike Schumacher and ECB stuck between a rock and a hard place. What do they do?
ECB is in a really tough position, Jonathan. Now, if the situation in Ukraine calms somewhat, then I suppose you can imagine ECB hiking 25 and maybe 50 at some point this year. But if the Ukraine situation remains tense, the ECB is really just about out of options. I would say a rate hike in that case is probably off the table. It continues bond buying, but it really has no good place to go.
Do you think they have to tolerate these inflation prints, Mike? Is that what you're saying?
I think they're scared, but I think perhaps while the conflict rages, they may have to tolerate inflation. They can talk tough, but as far as actually doing a rate hike, which the ECB has not done since 2011, and by the way, it's got a checkered history in terms of rate hikes, I think the ECB's current strategy is to hope.
Mike, how do you think the German bond market trades that? I've got 2s through 0, up 9 basis points on the day. I've got 10s at 68 basis points, up 5 or 6 basis points. If an ECB sits this out and watches inflation surge and growth potentially go into negative territory, how do bunds trade that story?
Yeah, bunds get drilled in that case, Jonathan. I think you get a much steeper curve in the bond market, and there have been a lot of interesting aspects to, let's say, the bunds relationship to treasuries this year. First and foremost, the 10-year bond has been tracking the 10-year treasury yield almost basis point for basis point. Not quite, but pretty close. Typically, the bond moves maybe half as much as the treasury. So we think that's going to diminish, and the bonds will move less. But if the ECB sits it out, I think you see longer-term German yields go up as that inflation premium gets priced in. Short yields stay where they are, deeply negative in some cases for some countries, as the ECB really sends the signal we're not doing much. So steeper curve, higher yields, but not to the degree we've seen so far this year.
Lisa, you touched on the European risk. We used to talk about the prospect of the US decoupling coming out of the Eurozone debt crisis. Do you doubt the US's ability, and not just the economy, but the equity market, to decouple from some turbulence potentially in Europe through the rest of this year?
Well, look, I mean, I think the decoupling of, U.S. equity markets has been a theme that we've quite frankly seen almost since the great financial crisis back in 2009. It's been a pretty long run of, 12, 13 years where, U.S. market outperformance has been, pretty stunning. I think our view is that, as the forces that we're seeing, whether it's from the global pandemic, whether it's global central bank tightening, whether it's global inflation, global shifting in geopolitics, I think it's going to be very hard for the U.S. to sustain, that level of outperformance and that gap. So to answer your question, I think we do recouple here. And for the U.S. markets, I think that means a downward rating from what, has been pretty large multiple expansion over the years.
Lisa, is that an index call, or do you have some sector preferences below the index that you've got a little bit more conviction about?
Yes, certainly. So we do, and Jonathan, thanks for pointing that out. Our skepticism in the U.S. market is very much at the index level. We recognize that the recent sell-off has created a lot of stock picking opportunities, and so we're trying to do that actively. And we're finding a lot of things to buy in industrials, in materials, mining, in the energy sector, obviously, healthcare, consumer services. Those would all be be places that we're pretty aggressively stock picking. And quite frankly, while some of my colleagues downgraded financials earlier this week, Mike Wilson and Betsy Graysick at Morgan Stanley, for investors that have maybe a 24-month horizon, we still think that there's interesting things to buy in financials as well.
Elisa, I noticed the move from Betsy and from Mike as well. And there were 2 points that Betsy made. There were a load, but I'll boil it down to 2. Ultimately, we've already priced in the rate hiking cycle. And 2, this cycle is going to be really sharp and quick, Lisa. Does that make a difference to how the financials trade? If we get a really short, sharp rate hiking cycle of 50 basis points, 50 basis points, 50 basis points, and again?
Well, certainly I'm not one to ever, question Betsy's expertise here. And so, I think one of the points that she's making is whenever, the curve moves this far, this fast, and it becomes headline grabbing, that, your deposit betas go up, or essentially, in layman's terms, the amount of interest that, banks need to pay, depositors and savers. And that wasn't the case, back in 2016, 2017. And so that can, in the short term, can squeeze bank margins and bank profitability. But if we get through this pretty quickly, it's our assertion that banks are going to be able to navigate what is ultimately going to be a re-steepening curve on the other end of this by 2023.
Mike Schumacher, you made your call on the European curve, the Bund curve specifically. Can you give it me on the Treasury curve as well? 2s10s right now, 5 basis points. A very brief dip below 0 in yesterday's session.
Yeah, Jonathan, 2s10s was inverted for a nanosecond or 2 yesterday, but we think the curve gets substantially inverted very quickly. And if you look at what the bond market's telling us in forwards, something like -30, -35 at the end of the year, those are staggering numbers. And I'm on board with that. I think that's pretty likely. As far as the big driver is going to be just how quickly does the Fed hike. Currently, the market's priced for more than 200 basis points of incremental tightening this year, which is mind-boggling, frankly. So if the Fed delivers that, then yes, deeply inverted. We think inverted is probably the case. I will tell you, though, Jonathan, we think the telling point for the bond market is going to be really not how much is priced for 22, but how much does the market ultimately price for 23? Currently, there's a lot loaded into this year, not much for next year. We think that's wrong, frankly, and people have to equilibrate.
Interesting. Mike Schumacher, Lisa Shallett sticking with us. Deutsche Bank came out with a note this morning on yield curve inversion. They looked over 6 cases of inversion and said the following. It took another 3 to over 25 months before hitting the peak. They're talking about the equity market. On average, the S&P 500 returned 19% from the day of the curve inflection to its next peak. Just something to think about. We'll talk about it a little bit more around the opening bell with David Costin of Goldman Sachs. Let's get you some moves ahead of the open, about 20 minutes away. Here's Abby.
John, well, stock futures are down modestly. That S&P 500 E-mini futures down about 0.4%. Let's take a look at 2 laggards and 2 leaders down to the downside. Apple perhaps breaking an 11-day winning streak. Will it make it for 12? We don't know. Right now, not, down 0.6%. And of course, that winning streak was the best since 2003. Chewy plunging down 15%. Weak fourth quarter results. Their view is lackluster, perhaps reflecting coming out of the pandemic. Plus, there's a 29% bear short interest. To the upside, though, oil, of course, rallying today, up above $108 per barrel for WTI crude. So some of the energy names are rallying in sympathy, including Chevron up 1%, and then Lululemon up 6.8%. A mixed quarter, but sales guidance very strong, beating the street. Plus, the board approved a $1 billion buyback. That never hurts, John.
Abby, it never hurts. Thank you. Thank you very much. Coming up, Western allies tempering optimism over potential progress in Ukraine.
I had a meeting with the heads of state of our 4 allies in NATO, France, Germany, the United States, and Great Britain. And there seems to be a consensus that let's just see what they have to offer.
Fed officials trying to block out the noise with their sights set on tighter policy. That's next.
When you think of cutting-edge technology at sea, you might be thinking of stuff like this. But there's an incoming revolution on the high seas that isn't quite as sexy, but could be significantly more impactful.
Container shipping is the key component of global trade. About 80 or 90% of all the world's goods are transported at sea at some point.
But there's a significant unseen cost to the modern era of global commerce.
About 3% of all the world's CO2 emissions come from shipping.
3% may not sound like a lot, but that's roughly comparable to the entire CO2 output of Germany. Since reducing trade isn't a likely option, what about a technological improvement to help reduce the emissions from these well-stocked maritime behemoths?
However you get your news.
This is Bloomberg Daybreak with Lee.
On Bloomberg Radio.
Welcome to Daybreak Australia. This is Bloomberg Technology. This is Bloomberg Green.
On TV, radio, and the web, this is Bloomberg. The jobs report last month beat estimates.
We have a very tight labor market. It is pretty clear.
Historic recovery in our labor market.
One of the best labor markets in a generation.
This Friday, Tom, John, Lisa, and Mike will bring you the data and analysis as the numbers cross the Bloomberg.
More people are coming into the labor force. It's going to decelerate the wage gains. Is that good?
As the Fed looks to contain inflation, it's really important that the jobs recovery continues.
The March jobs report, Friday on Bloomberg Television and Radio.
We're going to continue to keep strong the sanctions. We're going to continue to provide the Ukrainian military with their capacity to defend themselves. And we're going to continue to keep a close eye on what's going on.
Mistrust and verify. Western allies remaining skeptical following Russia's pledge to scale back military operations in Ukraine. Fed officials trying to block out the noise.
I am very open to going faster. I'm not willing to commit to that today, but I think 50 basis points is quite possible. We'll just have to let this play out and be very attuned to the data.
On the data and this Fed, it's Mike McKee. Morning, Mike.
Good morning, John. Well, a lot of people are talking about the curve inversion and the idea that suggests the Fed's going to go too far, over-tighten, the economy slows, we go into recession. The question is, with monetary policy working with long and variable lags, how's the Fed going to know? Bill Dudley told us yesterday he thought the SOM rule comes into effect, the idea that if you start going up on unemployment, you end up in recession, which is true according to the SOM rule, but look at the red recession bars there. The SOM rule peaks, the unemployment rate peaks deep into the recession. So it's not a forward-looking indicator. What do we do from here then? How does the market look at this? Well, you're going to watch jobless claims. Remember those? We used to care back during the pandemic. Jobless claims will give us an idea of whether the labor market is loosening up or not. Jobs plentiful and hard to get in the Conference Board survey, and the ISM employment indexes. Those will be kind of the leading indexes. The payrolls report, we get payrolls report on Friday, lagging index. That jobs plentiful indicator is kind of interesting. Take a look at this. The white line there, jobs plentiful. The blue is jobs hard to get. And you can see jobs plentiful at a high for the entire series. That's a record. Jobs hard to get, very close to a record. Just 1 month in the previous 40 years was lower than that. But look at the recession numbers. When we get to these peaks of jobs plentiful, that tends to tell us we're getting close to recession. So that's something to keep an eye on as we talk to Fed officials and find out whether they think they need to go as far as, let's say, Mike Schumacher was talking about earlier.
You're speaking to another one a little bit later, Mike. Richmond Fed President Tom Barkin. I'm looking forward to it. What's the big one for him?
Well, we want to know where he stands on the 50 basis point question, but then can they bring us in for a soft landing? Obviously, he's not going to say, no, we're going to do a recession. But what are the odds that they can pull this off and do they think they need to go above neutral in order to slow the economy down enough?
Mike McKee, must-watch TV whenever he's with a Fed official. I'm looking forward to it, Mike, at about 10:30 Eastern Time, so an hour and 10 minutes from now. Mike, thank you. Just a quick one, a headline coming from Dow Jones. The EU is considering new Russian bank sanctions, according to diplomats. That coming from Dow Jones just moments ago. For the broader market, you know the story by now. We've had a massive move on a two-year yield in America through the whole Treasury curve. It seems to me the consensus is now a 50 basis point move at the next Fed meeting, a 50 basis point move after that. And even with that conversation, big tech has rallied and rallied hard. We'd have 11 straight days of gains on Apple to close out yesterday's session, the longest winning streak since 2003. So Lisa Shallett, what is going on and why is big tech rallying in the face of this?
So I think, you know, our hypothesis is twofold. One is that there continues to be an extraordinary amount of liquidity and desire among investors to quote unquote buy the dip and own the winners that have dominated literally for the last 12, 13 years. I think a second dimension of this is this idea that owning those names is defensive. In this backdrop of potentially an inverted yield curve, with this potential of slowing economic growth. Our thesis is, as you know, Jonathan, somewhat opposed to that view. Our sense is that some of these names are fully valued, are already at peak profitability, and are not going to be immune to the forces that we're talking about. We are not talking about, small micro economic things here. We're talking about things like geopolitical risk, Fed policy execution risk, inflation risk, and no matter how great some of these companies are, we believe that they're going to feel the implications of it.
Consumer confidence is already rock bottom. Mike Schumacher, it's fascinating for me to see you, Mitch, when it comes out. You look through the data, decade lows, you go through the survey, you see some of the commentary, and you look at the output numbers off the back of it, and it's hard to find a relationship, Mike, between rock bottom consumer sentiment and just the output numbers we seem to be churning out in the US economy. What do you make of that, Mike? Is that a disconnect? Does one start to lead the other? What's happening there?
I think the sentiment measures, John, you've got to think about what drives those. So for instance, no pun intended, people certainly care a lot about the price of gasoline. It's been up, it's been very volatile, it's probably weighing on sentiment. It's tough to get really fired up about the state of the world when you've got a shooting war going on in Europe, so it's factor number two. So a lot of things weigh on sentiment that don't necessarily influence people so much when they go to the job and work on producing more widgets or more cars or whatever it might be. So I think there is a bit of a disconnect, as you said, and it really is going to be driven by inflation and by war prospects going forward.
Mike, to what extent should I ignore that data then when it comes in?
I ignore it pretty comfortably, sleep well at night, so I don't give it a lot of heat, Jonathan, but I think Michael McKee really hit the nail on the head. When you think about the prospects for the economy, focus on the jobs market, focus on the actual data, focus on jobs openings, job quit rates, that sort of thing. That's going to give the closest thing we have to a real-time indicator as far as how the Fed's policies are playing out.
Mike Schumacher, Lisa Shallett, great panel going over some of the big issues right now to you both. Thank you. The ADP report behind us, 455 was the number, 455,000. The estimate was 450K. Payroll's Friday just around the corner. The numbers you need to know, 490K is the median estimate. The previous read was 678,000. Of course, that's a moving target. That's from our survey. It will keep on moving through to Friday morning. And looking at unemployment, the expectation at the moment, the median estimate, 3.7%, just a little bit lower than the 3.8 that we saw in the previous month. Those numbers, of course, for the month of March, as we wrap out the month of March in about a day or so. Coming up, the morning calls and later, how big tech has been overcoming rising interest rates. That conversation just around a corner with this guy, David Kostin of Goldman. Looking forward to this one around the opening bell. From New York City, this is Bloomberg.
SpiceJet 737 MAX aircraft. Earlier today said that Boeing is going to compensate SpiceJet in form of cash and aircraft. There's a big celebration happening at the Gwalior airport. As you can see, they've literally rolled down the red carpet for SpiceJet chairman Ajay Singh. There are balloons, there are flowers. This is a big deal for SpiceJet because it is the only Indian operator of Boeing 737 MAX planes currently.
Why do the biggest names in business choose Bloomberg?
That is a great question.
It's a great question.
It's a great question. Great question. Great question.
Great question.
Great question.
That's going to be the best question I get all night.
I'm glad you asked that.
Bloomberg Television. Top experts. Great questions.
Minutes away from the opening bell this Wednesday morning. Good morning. We are negative about 1/3% on the S&P. On the Nasdaq, down about 0.6. That's the price action. Here are the morning calls. First up, Goldman downgrading Bank of New York Mellon to neutral, 60 price target, expecting 2 consecutive years of declining net interest income. That stock is down 1%. JP Morgan downgrading Procter & Gamble to neutral, recommending investors lower their expectations amid lingering cost and currency headwinds. And finally, Amazon getting its first sell rating since 2020 with BNP initiating coverage. The analysts seeing nearly 20% downside due to continuous bouts of inflation shock. We're down 0.6 there. Up next, from inflation to rising interest rates, big tech finding ways to overcome the obstacles. David Costin of Goldman is coming up next at the opening bell. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
I think what we've seen during this period of time is that communicating via video is not a fad, that we are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
24 seconds away from the opening bell in New York this morning. Good morning. Your Wednesday morning price action shapes up as follows. Down about 0.25% on the S&P after a 4-day winning streak. On the Nasdaq right now, down 0.5%. Even with the bond market doing what it's been doing, this equity market month to date is doing pretty well. Switch up the board and get to Treasuries. Yields shaping up as follows on a 10-year. Going into payrolls on Friday. Yields inching a little bit higher again. 242.20 on 10s, up 3 basis points. The euro finding some strength in the face of the highest inflation print we've seen since the 90s from Germany. Euro dollar 111.42. Let's call it 111.43. Up 0.5%. And crude rallying now, up by more than 3% to 107.82. Yesterday, some hopes for a diplomatic breakthrough, in this morning, seemingly everyone throwing cold water on that. In the session right now, about 30 seconds in, we decline 0.25%. Turned yesterday upside down for energy, yesterday morning anyway. Crude is higher, energy's higher. In the equity market, up 0.6%. Consumer discretionary is down about 0.5%. For your moves at the opening bell, here's Abby.
John, let's start and stick with that energy story. And we are talking about most of the energy names higher at this point, as you were just mentioning, energy the best sector. In particular, BP right now up more than 1% in sympathy with oil. WTI crude back above $108 per barrel. Rio Tinto also higher, so you see a little bit of a rebound for materials. Micron, they put up a really nice beat, or excuse me, they put up a beat and strong outlook, giving the stock a nice boost up about 5%. Chewy, on the other hand, down 15%. This, of course, after they put up a mixed quarter. The view for sales not great, and there is a 30% bearish short interest. Those bears very happy today, John, with Chewy down 16%.
Abby, thank you. A key feature of the rally through the month so far has been the massive moves we've seen out of big tech. Ed Ludlow on the West Coast, driving you through some of the price action. Morning, Ed.
Yeah, morning. I was going to start with oil, John, up 4% on WTI West Texas Intermediate crude, up to about $108 per barrel. It's interesting, there's signs that production in Russia has been wavering, even though we had such optimism on Tuesday around talks with Ukraine, and that would boost supply. Also, the Bloomberg Commodity Index down by around 2 percentage points, snapping basically 2 straight days of 2% gains. There's a change in that equation, right? You look how that's playing out in the equity markets and investors trying to position themselves. Energy, materials, where do you put yourself in this market when you're not sure on the long-term outlook for the supply? The materials stocks up around 0.2%, energy stocks down 1.3%. But yes, back to big tech, because you know that's where I focus. We've had this broad rally, right? And the mega caps, the tech stocks have been the mainstay of that. The Nasdaq, even though we're a little softer on Wednesday, seems a little bit unstoppable, but there are warning signs that the gains of the past 2 weeks has hallmarks, essentially, of this bear market rally, despite that sustained momentum. Mega caps, you look at the value we've added across the biggest technology stocks, $1.5 trillion over the last 10 days or so. What derails that? What is it that the market is actually tracking? What is the psychology here? You and I have discussed over the first 3 days of this week how not all tech stocks are created equally, right? We're worried about the outlook for higher rates than the Fed, but there is this move, it seems, into higher quality growth stocks. But what I would say, looking across the NYSE FANG Plus Index this Wednesday morning, Apple, John, up for a 12th straight day, just up 0.2%, on course, of course, for that all-time record winning streak, but the rest of mega caps a little softer this Wednesday morning.
What a run it's been. Ed, thank you. We'll catch up with you a little bit later. Ed Ludlow there on the West Coast. The Nasdaq 100 entering today at a 12-week high. Goldman say this: leverage investors have participated by aggressively reducing their equity exposure. They go on to say, short covering by these participants helps to explain why some of the longest duration equities have recently risen sharply in the face of rising interest rates and a more hawkish Fed. I'm pleased to say the man behind the note joins us now, David Costin of Goldman. David, always good to catch up, buddy. Let's start right there. Yields are flying. They've been surging through March. We've got hawks all over the place and big tech has rallied. Walk me through piece by piece why this has been happening from your perspective.
Well, there's a concern about a upcoming recession. It's not the Goldman Sachs economic forecast, but certainly in the minds of many portfolio managers, that is a increasing risk. And that is one of the reasons why their attractiveness of some of the largest technology stocks and some of the more durable earnings companies in many different sectors, but we'll focus on tech for just a minute. And I believe that is a key kind of underpinning thesis for why the stocks have done well. We are about to embark on the first quarter earnings season that will kick off around April 11th or so. And I believe that there's going to be a significant number of negative earnings surprises. In fact, you probably get a large number of pre-announcements in the coming weeks just before the earnings season. The reason I believe that is that it's been a particularly difficult quarter from a operational point of view for management. You think about the first month of the year in January was largely overshadowed by Omicron, and then you had the higher rates that really kicked in February, and then you have most recently the tragedy in the war in Ukraine. So you have these events that have really impeded a lot of sales for a lot of companies, and I think managements have been reluctant to give guidance, understandably, because things are really swiftly moving. And so I think that's a question on the prospect for earnings. Jonathan, the earnings revisions have been negative for most sectors in the market in the last month. And frankly, they've been pretty tepid for the full year in the first 3 months. But the most recent kind of activity has been downward earnings revisions. And I think that is a concern about on the part of many portfolio managers and which companies have the probability of actually delivering on expectations. And therefore, a lot of the technology companies are perceived as having more stable prospects of earnings.
Do you share that view, though, just on tech? I mean, you've got this view that we're going to get some earnings warnings here, David. Where do you think those warnings will be concentrated?
Well, I think you want to, then I feel very strongly you want to break the technology sector into a couple of pieces. One is profitable, growing companies, and there's a large number of unprofitable companies that are still growing their revenues and forecast to grow revenues quite sharply. Jonathan, those two groups of stocks basically trade at the same valuation level, around 7 times enterprise value to sales. That is sort of inconsistent in terms of a normal valuation, well-ordered market. Normally, if you have corporations and a bunch of companies that are growing at 20% top line with very high margins, say north or above 20%, and then have a group of stocks where they're also growing rapidly, but they're very thin margins, perhaps losing money, those should not generally trade at the same level of valuation. And therefore, I think there's more risk in some areas in technology. Where you're likely to get some of the weaknesses, probably in some of the consumer discretionary oriented and facing companies, some of the consumer staples areas where the consumer has been is challenged in this environment. So we think about where that's weak expectations on profit growth. That's an area that we would be concerned about. Obviously, another area is some of the companies that have a lot of revenue exposure towards Europe, as compared with companies that are primarily domestically facing. That's another kind of split in the market in terms of investor focus, which I happen to be focused on a lot with conversations. Dividends would be another area of focus. Those companies that have both increased their dividends already since the start of the year and are forecast to have kind of increased dividends hikes this year generally offer some ballast and some insulation to some of the broader macro issues of a decelerating economy. I think the general environment is you have weakening profit growth, and you have a higher interest rate environment. And in my calculations, with a 10-year U.S. Treasury yield, nominal yields at around 2.7% at the end of this year, and the economic forecast that we're assuming, which is deceleration the rest of this year, that supports around 4,700 level for the S&P 500, which is very limited upside. Yeah. Whereas in contrast, if you had a recession, you'd be closer to, say, 3,600, much lower. I think the distribution of risks right now is more to the downside than the upside, given that combinations I just mentioned.
Interesting. Well, I'll come back to the rates call in just a moment. You mentioned the consumer. I think that issue is multifaceted because going through your research as well, you also talk about the household allocation to equities today relative to recent history. And David, I wonder if the consumer makes you worried about consumer spending, does it also make you worried about household allocation to equities, which has been supportive of this rally year to date?
Well, it's a situation from an asset allocation point of view that it's not just for the consumers. If we kind of expand that for a moment to think in addition to mutual funds and pension funds and foreign investors, collectively, those categories, they control or they own or they represent about 90% of the ownership of the U.S. stock market. Obviously, a major portion of that, about 38%, is comprised of consumers. Those entities have around 50% of their asset allocation to equities, about 20% to bonds, and around 12% to cash, balance being gold and commodities, things like that. But those three major categories, where else is one going to be allocating money in this environment? With the bond yield forecast that we have at Goldman Sachs, rising rates means it's a real headwind for getting a positive return in the fixed income market. Cash likely to continue to get a better return as the Fed continues to hike rates. But in the equity market, broadly speaking, there's a bias in favor of that from a risk premium point of view. So at the end of the day, we think about the opportunity set in equities, modest upside, admittedly, I think relatively, also some downside. Obviously, there's a distribution of some risks, but the balance sheets of a lot of companies are very, very strong, and they're buying back a lot of stock, which is the other supportive attribute of equities at this point.
David, not every research department is fully aligned between rates, the economists, and the equity strategists, but I want to pick on your rate strategists just for a moment. They've got curve inversion year-end this year, year-end next year, and year-end the year after. David, that's a very strange dynamic to have that consistently through the next 2-3 years. I want to understand what that means to you from your perspective, even if you don't agree with it. And you can say if you do or you don't. But even if you don't, I want to understand if that's going to be the case in rates, what does that mean for stocks?
Well, it means that the trajectory of increase in the level of the market or decrease in the market is going to be a function of profit growth. It's incumbent upon companies to deliver better earnings, probably through margins. And the reason for that, Jonathan, is the idea of a decelerating economy means that the challenge for companies is to generate revenue growth as the economy is slowing. So therefore, there's much more focus on the margin structure. And what you are seeing now and what you are likely to continue to see this year is corporate spinoffs. That's likely to be the major corporate finance development, in my opinion, as you see the balance of 2022 continue, because corporations are thinking about ways to improve their margins and create value for shareholders in an environment when the economy is decelerating, getting higher sales is more difficult. Now, coming back to your question about rates, the idea of valuation, headwinds, that's basically what a higher rate environment is going to entail. You've got higher short rates, you've got higher long rates, you have a yield curve that is basically, bear flattener in terms of the trajectory and reshaping of the curve. That's a more challenging environment for equities. The companies that are buying back a lot of stock, likely to be an area that outperforms in that case. Companies that are paying dividends, also a way of thinking about that. The overall index, Jonathan, is likely to be a more shallower trajectory of, upward, generally speaking, upward move in the equity market, because the economy generally is still rising. We are not anticipating a recession, although the a inverted yield curve would suggest that is certainly a risk. That's one of the reasons, many reasons why, but that's a particularly intermediate risk why investors are so focused in this area.
Can I finish on this question, because I know you've got to run, David? Are you losing conviction on your year-end price target? Just going through this conversation with you right now, how high is your conviction on that call right now at 4,700?
Well, there are a couple of ways to think about it. Number one, we have had the best 2-year return in 75 years. The U.S. equity market has doubled in value from the low of the pandemic. That's a better 2-year return than you had coming out of the financial crisis, and it's a better 2-year return than you had coming out of the 1974 bear market. So it's been a particularly, powerful rally, and the idea of margins at record high levels with all of these headwinds on supply chain disruptions, commodity prices, labor costs, these challenges have made it harder for a lot of managements to navigate in this environment. But we're not anticipating a recession. So therefore, the history shows, Jonathan, when you are a buyer of the equity market, when it goes down by 10%, and recall we've been down 13% from the high on January 3rd, down 13%, the market typically rallies back to just about the peak of where it was in the next 12 months. So therefore, if 4,800 was basically the high on January 3rd, our forecast of 4,700 a little bit below that at the end of this year is consistent with what has happened historically. That's not how we arrive at the forecast, but you ask about the conviction.
Of course.
That's generally the trajectory that I would anticipate the market, kind of haltingly getting towards later this year. Remember, you'll have a lot of hikes in the near term, but we'll have a midterm elections in November. And when you look at the end of the year, that will then be behind us. And so looking forward, I think that's the idea, and that's the building blocks behind our forecast.
We've got to talk in earnings season as well. David, good to catch up, buddy. It's been too long. Thanks for your time today. David Kostin at Goldman Sachs. Nice to see you too. Coming up, Ukraine's capital still under threat despite Russia's promises to scale back military operations.
Russia has failed in its objective of capturing Kyiv, but they can still inflict massive brutality on the country, including on Kyiv.
And sanctions continuing to pressure Russia's debt payments. That conversation just around the corner.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
And that's the way you run good risk management.
But we need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dining, shopping. But many shops here are still closed. Most of the outlets are either for rent or for sale as they have run out of business.
Saya kerjanya di sini udah lama, udah ada 10 tahunan di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame, sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu, kalau dulu rame sekali. Sekarang paling dapat jualan ya 100, 120 gitu, 200 ya. Kalau dulu sih ya nyampe dah 1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja, belum ada turis ke Bali. Masih ya domestik aja.
While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people from Australia, China, and Europe to come visit next year.
Front Row, exclusive interviews with the most influential figures in finance. Lloyd Blankfein.
Deflation is a terrible thing. Inflation you could tolerate.
Kathy Wood.
Tesla will be in the pole position to dominate.
Jeremy Grantham.
We've had a very, very abnormal honeymoon Goldilocks period.
First available on the Bloomberg Terminal, then on Bloomberg Television and Bloomberg.com. Front Row, the best seats in the house for business's greatest minds.
Nobody should be fooling ourselves by the Kremlin's now recent claim that it will suddenly just reduce military attacks near Kyiv, or any reports that it's going to withdraw all its forces.
It's a delicate time for Russian debt. Expiring grace periods on Russian debt threatening to spark default. Some of the country's biggest companies racing the clock as certain banks continue holding up payments. Damien Sasser of Bloomberg Intelligence joins us now. So, Damien, let's go through this piece by piece. You've got Russian corporates, one. And then you've got the Russian government too. Can you help me understand how recent sanctions have affected the flow of payments through corporates into the end investor and through the sovereign to the end investor as well?
Sure. So, I mean, look, we've had a number of Russian corporates that have successfully made payments to their creditors on their foreign debt. And same with the Russian sovereign. So far, so good. They've made their coupon payments. They made $117 million at mid-month. They just made another $102 million. And then they've actually started wiring the funds on a $2 billion principal payment, which is due on the 31st. They've given creditors the option to accept payment in ruble, but obviously no one's taking up that option, at least no real investor here in the U.S. So shifting to the corporate side, what's interesting today is we have not one, not two, but three, well, really 2.5 companies that have grace periods expiring on coupon payments that were due. What's interesting about all three of these companies, those being Russian Rail, Eurochem, and Shellpipe, is that, well, 2 out of the 3, Citigroup is the payment agent, and Citigroup has really towed the line here. They want to make sure that they are not violating OFAC sanctions, that they are doing everything by the book, and what this is doing, in the case of Severstal, is there's a technical block-up, and so they aren't able to make payment. These companies are unable to make payment because they don't have all the paperwork in place, Jonathan, and so that's what these companies are contending with, and so it's not about capacity or willingness to pay, it's about the technical ability to make that payment, which matters most.
It's truly original, isn't it, to be thinking about it that way. We're looking at dollar ruble at 84. Damien, when you look at that, what kind of a market am I looking at? Can I even call that a market?
Yeah, no, I don't really believe you can. I've been looking at it as well. And look, I mean, it certainly reflects probably some movement of money, between Russia and some of its counterparties, but certainly it is in no size and a very illiquid market. And if you just look at the way forwards and other products off the back of FX trade, I mean, very illiquid, very volatile. You really can't rely on the pricing. But to your point, 83, I mean, where were we trading just a week ago? I think at 110, 115. I mean, it's come a long way. I just don't look at it anymore, though, Jonathan. To be completely frank, it doesn't really reflect the clearing price for the group.
You're not alone. I'm in the same position. I'm looking at it now. 2 Mondays ago, a 110 handle. This past Monday, 101. Right now, 84. And I'm not sure who's trading it either, Damien. Can foreigners sell their stocks yet? Over in Russia? Are they still banned?
It's all banned. I mean, they can't, they banned short selling. They banned the ability for foreign investors to repatriate any be it equity or fixed income. If it's local currency debt that you own in Russia, you can't get your money out. So the ruble is so not reflective of what the reality of trying to move money into and out of Russia is. But what's interesting, and I've talked about this before, if you look at the state of the Russian financial system, you look at their amount of repo outstanding, that to me is kind of rolling off, which means that at least on the ground, things are getting a little bit smoother. Liquidity is a little bit improving for locals and households on the ground in Russia.
Damien, good to catch up, as always. We'll do it again before the weekend, I'm sure. Damien Sasser there of Bloomberg Intelligence. We are about 22 minutes into this session. Equities down 0.2 on the S&P, on the Nasdaq down around about 1/3. With some of your movers, here's Abby.
Well, John, related to the de-escalation hopes fading, not surprisingly, we have oil popping, but we also have stocks with particular Russia and Ukraine exposure falling. Let's take a look at some of them. Point in case AerCap, the world's largest aircraft leasing company, it is down 4.5% at the lows, down closer to 12% on the news that they have filed a $3.5 billion insurance claim on Russian planes stuck in Russia. Estee Lauder has nearly 3% of revenue from Russia and Ukraine also falling. Renault down 3.25%, considering an ownership transfer of its majority-held Russian venture Avtovaz, and then Wizz Air Holdings down nearly 3%, of course, the airline most exposed to the region. Interestingly, though, John, on those de-escalation hopes yesterday, it took the VIX, that volatility or fear index here in the U.S., below 20, still there at 19, but the European VIX still elevated closer to 27. So the fears are lingering there, and not surprisingly, over the last 2 months, the S&P 500 outperforming, in fact, rebounding up 4.3%, but the stock 600 down, the EM markets down, and Russia, that index down 28%. So lots of pain still being felt there, John.
Abby, thank you. We have an inflation shock in Europe. The German 2-year up 11 basis points, positive 4 basis points. We haven't been in positive territory since 2014. That happened in the last 24 hours. Guy Johnson's going to run you through some of the data, I'm sure, a little bit later this morning. Up next, your trading diary from New York. This is Bloomberg. 25 minutes into the session, we're down about 0.25% on the S&P, on the Nasdaq down 0.5%. 4-day winning streak coming into Wednesday, we snapped that just a little bit. That's the stock story. The bond market story gets a little bit more interesting. The Treasury's at 236, but in Europe much more so, through zero on a German 2-year, with inflation in Germany with a 7 handle. That's the price section. Here's the trading diary. Richmond Fed President Tom Bargin speaking with Mike McKee. Don't miss that. It's in 34 minutes' time. Then President Biden providing an update on COVID and its strategy at 1:30 p.m. The White House's strategy. They'll unveil that a little bit later. Jobless claims coming up Thursday morning. Then on to Friday. It's payrolls Friday. Your median estimate 490K. From New York, this was the countdown to the open. This is Bloomberg.
When you think space, you probably think one space agency that travels under the radar is ESA, which is surprising considering what the European Space Agency has achieved and how vital it is to the global space industry.
We've collaborated with pretty much everybody who is involved in space exploration.
ESA wants to be a leading force in furthering humanity's mission into space.
Commander Ground, do you copy? Copy.
If we want to have successful human missions to Mars, we are going to have to learn to live and work off-world in a different way. The place where we are going to learn to do that is on the moon.
Can ESA help humanity take its next giant leap?
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Pepsi's Number Fever campaign in the Philippines has probably gone down in history as one of the biggest marketing disasters in history, mainly because of a human error that led Pepsi to print more winning caps than they planned. The resulting chaos caused riots, civil unrest, and even deaths. Reporting this story took over a year, and it resulted in me flying to Manila in the Philippines to meet unlucky winners and to find out exactly what happened back then in the 1990s. My name is Jeff Maish. I'm a journalist based in Los Angeles. I wrote the story for Bloomberg Businessweek about Pepsi's Number Fever campaign. The Philippines is a really interesting country. It's made up of thousands of islands. And it's also a country that's very heavily influenced by America. American culture is everywhere you look in the Philippines. They're obsessed with Frank Sinatra music, for example. They love all things America, and that extends to their love for soft drinks, Pepsi Cola, Coca-Cola. In the 1990s, it was everywhere. Pepsi and Coca-Cola were embroiled in what is now known as the Cola Wars. It was a fierce battle for market dominance. Number Fever was already a really popular promotion. It had been rolled out in America to great success. And so Pepsi decided to roll it out internationally, particularly in Asia. They thought it was the answer to their problems. They thought it could finally help them beat their biggest competitor.
Look for the winning number in Sari Sari stores every day, also on TV, radio, newspapers. You could be a millionaire.
$1 million pesos, or $68,000, doesn't sound like a lot now, but in 1992, that was a phenomenal amount of money. You've got to remember that in the Philippines at the time, the average monthly income was about $100, so $1 million pesos was wealth beyond anyone's wildest imaginations. Number Fever caught fire in the Philippines. Kids were saving up their pocket money to buy a bottle of Pepsi. Parents were squirreling away all of the bottle caps in bags. You would walk down the street and people were going through trash trying to find discarded bottle caps. It was a national phenomenon. Pepsi boasted that half the population of the Philippines was playing it. Number Fever boosted Pepsi's sales every month from $10 million to $14 million. It had a huge impact on Pepsi's bottom line. Number Fever quickly became number hysteria. Maids were being jailed for stealing their employers' winning bottle caps. There was even some murders over winning bottle caps. People were fighting in the streets over these caps. There were signs that there were going to be problems with Number Fever very early. Pepsi had rolled out the competition in Chile, and a garbled fax had caused some kind of problem with the winning number. They'd announced the wrong one in Chile, causing riots. There were signs that there could be big problems ahead if they didn't keep their eye on the ball. So in 1992, Pepsi decided to extend the campaign in the Philippines, and they announced that the competition would go on for a few more weeks. One night, on the television news, they announced the latest winning number, 349. The problem was, 349 had already been allocated as a non-winning number in earlier campaigns. So there were literally hundreds of thousands of bottle caps with 349 just floating around the Philippines. Hundreds of thousands of people all across the Philippines, thousands of islands, were finding winning bottle caps. 349, 349. Some people had 10 lucky 349 bottle caps. People were dancing in the streets, celebrating. They thought their problems were over. They were millionaires. It's still not certain exactly how many winners there were of lucky 349 bottle caps, but we know that Pepsi printed over 600,000 of them. Pepsi realized very early that there was a problem. Hundreds of people started arriving at their bottling plants with their lucky bottle caps. They realized something was seriously wrong. Pepsi tried to solve the problem by offering a small token donation to anyone that brought a lucky bottle cap to their bottling plant. But it wasn't enough. People didn't want just a handful of pesos. People wanted their $1 million peso prize. Within a year, violent protests and riots outside Pepsi factories would leave dozens injured and 5 people dead. At one Pepsi factory in the Philippines, a grenade was thrown through the window. It killed 3 Pepsi employees. Anacita Rosario was a school teacher living near Manila in the Philippines. She was one of the tragic victims of this whole thing. She was walking to a nearby store to buy some rice one day when a Molotov cocktail was thrown at a Pepsi truck in a violent protest. It bounced under the truck and exploded. It killed her and an innocent bystander who was just a child and injured many others. When I was in the Philippines, I tracked down Anacita's daughter, Cindy, and her husband, Raul. It was clear to me that they were still very upset by the whole thing. You know, a family had been ripped apart by this competition. And Raul told me that he'd never remarried. He'd told me that he'd gone to meet Pepsi executives after his wife was killed. And he was angry. He said to them, you know, this wouldn't have happened if it wasn't for you, if it wasn't for Number Fever. The biggest revelation from my reporting was rumors that Pepsi was somehow involved in bombing their own trucks. I found a newspaper report with a headline that said, "Pepsi goons bomb their own trucks." And when I visited the NBI, the police department in the Philippines, they presented me with documents and interviews with people who claimed that Pepsi had paid them to cause riots and to cause trouble outside their plants in order to destabilize the situation and to frame the owners of the coalitions that were fighting them, to try and curry favor. I just thought that was so shocking. And of course, Pepsi denied it, but how bizarre that a company would be accused of bombing their own trucks. The contest had sparked so much anger in the Philippines because it landed at just this really weird time in the Philippines' history. It was during a crazy election that was racked with allegations of fraud. The Philippines was in a kind of love-hate relationship with America. They loved, obviously, the American aid and finances that was pouring into the country, but at the same time, they yearned for independence. They wanted to be their own country. Vicente Del Fierro was a local preacher living in Manila, and he hated the Number Fever campaign. Del Fierro thought Pepsi's Number Fever campaign was just one of the many ways that America was asserting its dominance over a third world country. He hated seeing his fellow countrymen get ripped off, in his eyes, by this huge multinational American company. He wanted justice. Del Fierro rounded up over 800 winners of 349 bottle caps, and he got them all together to sue Pepsi for over $400 million to be divided between those holders of lucky bottle caps. Del Fierro took money from some of the people who could afford it. They paid him 500 pesos to help with legal fees. But for people who couldn't afford the money, he would just represent them pro bono.
The alliance is to build up pressure on Pepsi. And so you see people marching in the streets. So we have mounted our own campaign, even in the U.S.
He flew to America and he hired two consumer lawyers here in America to take on Pepsi. He had a meeting at Pepsi's headquarters to try and resolve the problem, but he said he wanted to take it all the way to the highest courts in America. When those cases were heard in America, those courts decided that this was a problem that should be heard in the Philippines, not in America. Back in the Philippines, Del Fierro continued his case in the Filipino courts. At one stage, there were arrest warrants handed out for 9 Pepsi-Cola executives, which he saw as a big victory. We don't know if those arrest warrants were ever upheld, but it made newspaper headlines across the country. Pepsi did not take kindly to Del Fierro's campaign. They tried everything to shut him down. They sued him for libel.
My father had to attend 3 times a month for a branch 145 and another hearing for the branch 113A, also 3 times a month. Also, there was a time my father was hospital due to heart failure. Still, he had to attend the 2 branch hearing. Otherwise, for not attending, the judge will issue warrant of arrest to my father. My father passed away January 13, 2010 after staying for almost 1 year in the hospital. He died of complication due to heart failure. After the death of my father, I was inspired to do the website. PepsiCo will be remembered for what they did to the consumer in the Philippines and to my father.
When I reached out to Pepsi for comment for this story, they claimed that they didn't have access to anyone who was working at Pepsi that was around in those days. They also said that during COVID-19, they didn't have access to their documents about this, but you know, they were very careful to say that they were sorry for everything that happened, and we do know that Pepsi did try everything to try and make this right. The Pepsi number fever disaster cost the company millions. We know that they paid up to $10 million in those goodwill payments, but the financial effect could be much greater. After the disaster, we know that Pepsi sales dipped. They were overtaken by Coca-Cola again. Pepsi's number fever disaster changed the legacy of that soft drink in the Philippines forever. Some people of a certain age won't touch it. For many people, Pepsi is a taboo word. A lot of the people that I spoke to were still quite traumatized by their experience, by that experience of winning $1 million pesos, losing it, and then returning to their normal life in poverty in Manila.
When the news of the bombing came out, it was a massive story in Germany.
We are following some breaking news coming to us out of Dortmund in Germany.
It was covered by all the media outlets.
3 roadside explosions triggered at the same time last night as a coach left its hotel in the south of Dortmund.
Public figures commented on it.
We should not let them affect our life, whoever it was.
The media echo went far beyond Dortmund.
I think it was front page news in every single big paper around Europe. Everyone thought of like a terrorist attack, and people were scared that throughout the city in Dortmund there was more attacks to be happening.
Unbeknownst to investigators, just after the bomb went off and the players of the team were shell-shocked, the person who had masterminded the attack was actually sitting in the hotel eating steak and sweet potatoes. My name is Thomas Rogers. I'm the journalist who wrote the article, The Get-Rich-Quick Scheme That Nearly Killed a German Soccer Team. Dortmund is a mid-sized city in the western part of Germany in a state called North Rhine-Westphalia. And it's a former industrial city that's kind of fallen on hard times in the last few decades. It was severely bombed in the war, so the center of the city is quite stark. Some of the few high points include its soccer team.
My name is Ike Henning. I'm a reporter with Bloomberg News, and I'm a great fan of Borussia Dortmund. Dortmund fans are super loyal. On all match days, the entire city is in black and yellow. It's like a religion.
I think more than most German cities, soccer does play a very large role in the identity of Dortmund. In October of 2000, the BVB became the first team in the Bundesliga to actually go public. Salaries for soccer players in the Bundesliga have gone up very dramatically. With such high prices, they thought that by going public, they would be able to compete better with big teams like Bayern Munich.
Unfortunately, that didn't go too well. Dortmund bought too many expensive players, high wages, and the club almost went bust in 2005.
The price of their shares, it has sometimes gone up, but mostly gone down since they made that decision. So on April 11th, 2017, the team was staying in a hotel on the outskirts of Dortmund.
Match days are always special in Dortmund. Everyone is looking forward to it. The team always meets in the same hotel ahead of matches.
They stayed in this hotel in order to have a kind of neutral space before games so that they could concentrate, be sort of isolated from distractions, things like that.
Everyone was pretty optimistic. They had a chance to go really far, maybe into the finals. I was in the office and getting ready for match day. I was going to meet with a friend, a fellow Dortmund supporter, in a pub. As always, the fans are very excited about matches.
On that day, they were heading to play in the quarterfinal against AS Monaco at Signal Iduna Stadium, which is in the center of Dortmund. Shortly before 7 p.m., the players of the team boarded their official team bus.
When the bus took off the parking lot of the hotel and turned on the street, there were three detonations, 3 bombs that exploded and hit the bus of Dortmund.
3 explosions occurred close to the Borussia Dortmund team bus. The B team bus had just left the hotel. The explosions destroyed 2 windows in the rear part of the bus.
People screamed, people jumped to the ground.
The fellow Dortmund fan I was supposed to watch the match with, he called me and said, turn on the TV, there was an attack of the Dortmund bus. And I thought he was like, that was impossible.
Some of the players screamed at the driver to keep driving as fast as possible because they were worried that people might storm the bus.
German investigators say the explosive devices used in the attack on the Borussia Dortmund bus contained metal pins, and that one had pierced a seat headrest.
Unbeknownst to the team members, the actual mastermind behind the attack was, as they were disembarking the bus, was actually eating steak and sweet potatoes at the hotel they had just left.
Authorities are attempting to verify a letter left at the scene claiming jihadists were behind the attack.
Because there had been a series of attacks by Islamic terrorists in Germany and Europe, there was widespread suspicion in the media that this was another Islamic terror attack. 3 letters were found at the site of the bombing that took credit for the attack on behalf of Islamic State. There were, however, reasons to doubt this particular narrative.
Would actually be a surprise if ISIS were actually part of this attack. Possibly could be employed by other groups like the far right wing to try and shift the blame.
The letters had some strange qualities. They were written in a strange German that used big, sophisticated words, but had basic grammar mistakes, as if someone was native German speaker, but pretending to be a foreign person.
Federal investigators have detained 1 man suspected of links to Islamist terrorism, one of 2 suspects whose apartments were raided this morning.
Shortly after the bombing, a man in Austria named Rudolf, who was a big BVB fan, he noticed that something strange was going on the stock market related to the team's shares. He emailed the lawyers of BVB, who then forwarded that email on to investigators. The email stated that someone had bought 60,000 BVB put options, a wager that the value of the shares of the team would fall below a certain amount at a certain date.
Why would someone buy that ahead of a match and then 3 bombs go off? Something isn't right here.
For the person to make money off of that, it required the stock to go down quite a bit in a fairly short period of time. And it wouldn't just be the team losing a match, it would require something much bigger than that. There was another big red flag about this purchase, which is the fact that it had actually been made, number one, on the day of the bombing, but also from an IP address that had been traced to the actual hotel where the bombing had taken place.
When 3 explosions targeted the bus carrying the Borussia Dortmund footballers on April the 11th, written notes left at the scene claimed the attack was the work of ISIL. The truth, as is now alleged, is remarkable.
On April 21st, the police arrested a man in a southern German city called Tübingen. He was on his way to work, and his name was Sergei Venergold. He seemed like an unlikely suspect because he had no known connections to the Islamic terror world. He didn't seem like a far-right extremist. He didn't seem like a left-wing extremist either. He seemed to be a completely unremarkable young man.
A 28-year-old German-Russian man, named only as Sergei W., stayed in the same hotel as the players on the night before the bombing. He specifically requested an upper room overlooking the bushes where the explosive devices were hidden.
The media dissected why he would do that, what was his past.
He had been inspired by the 2015 terror attack in Paris. And he noticed that in the aftermath of the attack, the stocks of French companies went down. And he believed that if an attack took place that was directed at a specific company, that the decrease in stock price for that company would be even more dramatic.
It never occurred to anyone that someone would do that out of greed.
We now know that the suspect bought 3 different derivatives on the Borussia Dortmund shares. With all these derivatives, he bet on falling shares. The suspect bought the majority of these financial products on the 11th of April, the day of the attack.
If the plot had been completely successful and the stock had reached a value of 0, Venergold would have made up to 570,000 euros, or the equivalent of about $608,000. Ultimately, the plan completely backfired.
The attacker, Sergei Venergold, didn't make any money. In fact, he lost money.
In court, he would be extremely quiet. He usually kept his hands clasped together. One of the lawyers actually commented that he had never seen a defendant act so calmly. Venergold had served some time in the German military. From that information and from online research, he was able to figure out how to assemble remote detonated bombs that would do what he hoped to do. There were a few days of extremely emotional testimony, including the soccer players who described doubting whether or not they could ever play another game again.
It brought everything back up, and it didn't quite help them to kind of process what was going on.
Throughout it all, he sat there completely silent. The big mystery that was swirling around the trial was the question of why. He may have simply done it because he wanted to impress a woman. Rebecca is a young woman who has a very troubled home life. She ultimately sees her relationship with Venergold as an opportunity to leave that troubled home. Venergold is a Russian immigrant to Germany. He speaks with an accent. He has anxiety in large groups of Germans. She begins to resent the fact that he has these fears and feels a little bit trapped. Rebecca attempts to dump him on multiple occasions, and he threatens to commit suicide if she leaves him. Venergold apparently told Rebecca that she would soon be seeing a surprise. After being dumped via text message, he apparently began planning for this attack in earnest. Venergold was charged with 28 counts of attempted murder, which carried a maximum sentence in Germany of life in prison. He claimed that he had nothing to do with the attack, but as time went on, he admitted that he had actually been the person who had built the explosives and had set them off. But he claimed that he didn't want to actually kill anybody. Ultimately, Venergold didn't receive the harshest possible sentence. He was given 14 years in prison, but it's still a considerable amount in jail in Germany.
the threat of an asteroid hitting Earth is very real. If it's big enough, it's also very final.
These are very, very infrequent events. The probability is not zero, though.
A blinding flash of light streaking across the sky.
About 100 tons of space rock falls on Earth every day. Most of it is so small it burns up in our atmosphere or lands unnoticed away from major populations. No human in the past 1,000 years is known to have been killed by a meteorite, and according to NASA, no large object is likely to strike the Earth any time in the next several hundred years. However, one thing is certain: we haven't found them all.
There are thousands out there, and we don't know where they are.
There are a lot of asteroids in our solar system. They number in the billions.
Scientists all over the world are working toward detecting and deflecting the most catastrophic of natural disasters.
The race is on to find as many of these objects as we can.
We have a way of calculating whether or not an asteroid is potentially dangerous or not.
I mean, I think it's something worth investing in. It's our existence at stake, right?
Amy, let's get this one out of the way. It's probably the question you get asked the most, but how scared should we be?
Asteroids and comets are a natural hazard that's out there like a lot of other natural hazards. These are very, very infrequent events, these collision events, where an object actually impacts the Earth. The most important thing that we need to know about asteroids is when the next impact is going to happen and how bad it will be. What we know is that an object that's about, say, a kilometer across is capable of causing very, very wide devastation across the planet, really, truly global devastation. The object that wiped out the dinosaurs was somewhere in the neighborhood of 5 to 10 kilometers across, so even bigger than that. At a kilometer, it's still going to be very bad and it will have global effects. For objects that are capable of causing what I would call sort of regional damage, kind of a large major metropolitan area, a city and its surrounding environment, sort of around 100-ish meters. It depends on the details of the composition and so forth.
By the 1980s, NASA was cataloguing near-Earth objects. In 1994, stargazers watched as comet Shoemaker-Levy 9 hit Jupiter. The resulting zone of chaos was estimated to be as large as the Earth, and the event became a turning point in the search for asteroids and comets in our solar system. In 1998, Congress tasked NASA with finding 90% of asteroids and comets 1 kilometer wide or larger. Soon after, Hollywood blockbusters Armageddon and Deep Impact brought attention and fear to the masses.
The great news is that the vast majority, more than 90% of all the really large 1 kilometer near-Earth objects have been found. The challenge now is working down to these smaller sizes that are still quite capable of causing a lot of damage, but they're just harder to spot because they're fainter, they're smaller.
Can you give us a sense of how many are out there in our solar system?
We know that there are a lot of asteroids in our solar system. They number in the billions. Most of them, however, are between Mars and Jupiter in what we call the main asteroid belt. This is a region of space where most of the asteroids in the inner part of our solar system live, and they stay there for many billions of years. There is another population, though, that kind of leaks inward and gets into the region somewhat close to the Earth, and we call these near-Earth objects. We think that there are millions and millions of near-Earth objects that are out there in the total population. As of today, we know of sort of around 20, 25,000, something like that. When we first spot an object, we really know very little about it. We just see something moving across the sky. So all you get is just sort of a handful of snapshots, just enough to be able to tell that this isn't an asteroid that we've already seen before. And then once we can calculate the distance to it, we can now start to make predictions about its true size. Is it large or is it small? So we have a lot of information that we have to get pretty quickly to really understand what's going on.
Finding asteroids is just one piece of the puzzle. Planetary scientists are extremely skilled in determining the orbits and speeds of asteroids based on relatively small amounts of data. NASA runs simulations of the trajectories asteroids could take, which is useful but time-consuming. A team of scientists in the Netherlands have found a way that could buy us more time.
Our method is very quick. So you can very quickly get an assessment of whether or not the object is dangerous or not. If you look at the classical way of determining the danger of an asteroid, it may take days of computing time on very big machines to determine this hazardousness.
The current problem is that there's just too many asteroids out there to spend a huge amount of computational power on all of them. So the neural network allows us to focus on what really could go and pose a hazard to Earth.
A neural network is a computing system that mimics the way the human brain operates to find underlying relationships in a set of data.
By training the network in this way, you train it in recognizing those objects that are most likely to hit the planet. And once it's trained, you can apply this network to all the unknown asteroids. And then you can make a selection and saying, hey, these are the ones which appear to be having orbits similar to the ones which we know are hitting the planet. That doesn't mean that they do, but it only means that they look very similar to the ones we know they do.
What else did you find? Should we be particularly concerned about anything?
One thing that we did find is that our neural network was able to go and identify a handful of asteroids which weren't considered potentially hazardous, that when we went and integrated them forward in time, they came quite close to Earth.
We find a handful which were not detected before or not considered being dangerous before, and we think they are potentially dangerous.
It's very hard to simulate kind of going forward in time an asteroid that's going to hit Earth because, well, the Earth is really small. And space is really big, and then you have to have very exact parameters to shoot an asteroid that goes and hits exactly Earth. And then Simon had the ingenious idea of not even trying to do that and just launching the asteroids from Earth's surface and integrating backwards in time.
It's very hard to make it hit. So you need a lot of calculations which all end up in nothing. And the idea was then let's not do that. This is basically what NASA is doing. NASA is taking an asteroid, making multiple copies of them, shooting them all forwards in time, calculating their orbits, and then see what fraction sort of gets close to Earth. Not even hitting Earth, but getting close to Earth. And that they call it a potential impactor. So you calculate the solar system forwards in time for, let's say, 1,000 years. And then you launch asteroids from the surface as if you go forwards in time, would fall on the surface. You calculate them backwards to today, and then you get your orbital parameters of today's asteroids, which you know will land on the planet. And those you can use as known impactors and compare with all the other asteroids in the solar system.
Can simulations and AI, can those things fill in the gaps where perhaps telescopes and other imaging tools can't?
Absolutely. Since the observations get more complex, the physics gets more complex. And if the physics get more complex, the mathematics becomes more complex. And at some point, you can't solve your problems analytically anymore. And then this is where the computer comes in. Now we have this trained neural network. We have a way of calculating in a fraction of a second whether or not an asteroid is potentially dangerous or not, and therefore deserves more attention or more time to spend on for really finding out if it is dangerous.
When it comes to hunting asteroids, time is critical.
What we can do about a potentially hazardous object depends a great deal on what we know about it and how much time we have before the encounter. We'd really like to find them when they're decades away, because the more time you have, the more options you have, and the less energy it takes to move an object aside.
It also means we might not have to resort to launching a nuclear warhead at an asteroid. Until recently, pretty much our only choice.
That's an option of last resort, in my opinion, yes. We have lots of options available. You can just simply bump into the object and just nudge it out of the way. That's one possibility, and that's kind of, in a way, sort of the simplest thing to think about, just nudging it off its path a little bit with, a massive object, a spacecraft, let's say. It's just kind of like bowling, if you will. If you have a long time or a long stretch of runway in the lane, just a very small twist on the bowling ball will make a big change in where it ultimately ends up. Another option would be something where you take a very big, massive spacecraft and you park it next to the object and you use the force of gravity as a towing rig. That takes longer, though, and you need to be able to send a pretty massive spacecraft, and it obviously depends a lot on how big the asteroid is. Other options start to get more and more complicated, and they range from painting one side of the object a white color and painting the other side dark, and then letting the pressure of light sort of perturb its orbit.
In a departure from the lab and computer simulations, NASA has real plans to rehearse kinetic impact deflection. In 2021, the agency will launch DART, the Double Asteroid Redirection Test mission, which will intercept a 160-meter asteroid in 2022. Better to practice now before we have to deal with an actual threat. In the meantime, discovering asteroids is our best bet. Thousands of scientists and amateur astronomers around the world make up an informal network that survey the heavens. But that may not be enough. NASA wants more resources to map our solar system and better technology.
We need to ramp up our network of sensors, and also we need to just continue to strengthen our network of international observers so that we can get follow-up, because we find these objects when they're distributed all over the night sky.
Once we get more observations, we get better data, we can make better predictions.
If you look at the big impactors we have had in the last, let's say, 20 years, or maybe 30 years, or 50 years, most of them we haven't seen coming. So the danger, the real danger, I think, comes from the objects we don't know about, and not from the objects we do know about. This particular natural disaster, like a lot of natural disasters and like climate change, is a problem of the global commons. So the thing that we risk collectively is that it sort of then becomes nobody's problem, and nobody takes ownership over it. The asteroids are all over the sky. They just truly cross boundaries and borders with a second's notice.
I kind of imagine in the future maybe lots of small satellites around the Earth that are always going and looking outward. I mean, I think it's something worth investing in. It's our existence at stake, right?
The pandemic has affected everyone in different ways. Some pass the time by baking.
Homemade sourdough bread. Do I need to say more?
Some chose to binge watch Netflix.
It's your game.
Or maybe you started a garden oasis in your backyard.
Next, I'm going to put my lettuces in.
But for millions of others,
I'm going to be posting stocks that will boom.
They wanted to uproot the financial industry.
Let's just lock it on up and take $15,000.
Here's a stock that can change your life.
I see a stock going up and I buy it and I just watch it until it stops going up and then I sell it.
I have gained over $3 million.
I want some free money.
I don't think you can overstate the online communities or social media's influence on financial markets.
A large group of inexperienced investors who discuss their plans on social media platform Reddit have shaken up the stock market in a big way.
The stock that everybody's talking about right now is GameStop.
Video game retailer GameStop is set to continue their head-spinning ascent today.
The revolutionaries on Reddit are spanking Wall Street's ass.
The more these stocks go up, the more the big guys are getting creamed and losing billions of dollars.
This isn't a wealthy person's game anymore. Anyone can play it.
I took up a little bit of a new hobby, and I am interested in day trading.
As an investor nowadays, you don't have to look a specific way. You don't have to wear specific clothes. You don't have to be doing it from a trading floor on Wall Street in like a high-rise building in downtown Manhattan.
The narrative of what's driving the markets is no longer being held in secret offices in New York and Boston of privileged people talking to other privileged people. It's right out in the open. It's on Twitter. It's on Reddit.
From brokerage apps to Discord channels and subreddits to TikTok influencers, one of the last holdouts in the world of disruption, finance is next in line.
Investing should be as ubiquitous as shopping online.
That's Vlad Tenev, the CEO of Robinhood, the online brokerage app, talking about how he wants his app to disrupt the world of stock trading like Amazon disrupted the world of home shopping.
And I think that speaks to exactly the mission that a platform like Robinhood has, which is to democratize investing.
Robinhood was started in 2013 by Vlad Tenev and Baiju Bhatt in, where else, Silicon Valley, as an alternative to the big brokerages, but with one big difference.
As they were building the social network around finances for people, they realized that there was a gap in the market and that free trading could become something that they could bring to the markets, they could disrupt the industry.
While no-fee trading is industry standard today, it was unheard of when it was first introduced.
The online brokerage industry was really innovative when they came on the scene 10, 15 years ago, but they kind of stopped innovating where you haven't seen those commissions come down beyond $5 or $6 or $7. Robinhood think that by offering zero commission that they're going to push people onto this platform.
And on top of no-fee trading, the customers Robinhood was courting have been long overlooked in the world of finance.
So the typical customer of a Charles Schwab, for example, is putting a lot more money in that brokerage account than the typical customer at Robinhood. Even today, with all of its popularity, the median account size is about $240.
There's Fidelities in the Schwabs and the E-Trades of the world. They look down their nose at those kind of accounts. I don't want a $1,000 account. They're just a headache. I want a $100,000 account.
And this is key here, right? Because the thing about Robinhood that's different than every other single brokerage platform is how easy it is to use.
The design of the Robinhood app really has in mind a user who might be coming at this absolutely cold.
The fonts are very well sized, the shapes, the colors, all of that is something that the founders of Robinhood paid really close attention to.
And by creating an interface that catered to a newer investor, they were able to gather a pretty healthy group of customers. And by 2019, they had about 10 million customers.
Those 10 million customers were a huge success story for Robinhood, but no one could have predicted its explosion after the arrival of COVID-19.
Remain indoors to the greatest extent, and 100% of the non-essential workforce must stay home.
What we saw when the pandemic hit was the growth of Robinhood users absolutely turbocharged. And oddly, you saw this surge in interest in stock trading. Then they saw the absolute surge in 2020 in customer growth. And now, by many accounts, they have more than 20 million customers, which is pretty extraordinary. So the next step for them is to figure out how to monetize those users and how, even with their small account sizes, to get them to grow with the company and, as it releases more products, come along with them.
Robinhood would become one of the COVID economy's breakout successes. Robinhood traders, as they're called, became the shorthand explanation for the frenzy of often speculative retail investing after the pandemic lockdowns.
Kids wake up in the morning, they go on Robinhood. They're, in the shower, they check Robinhood. Kids are learning how the stock market works at 18 while they're at school, checking their phones in between classes because notifications pop up telling them what their stocks are doing that day.
With these new tools, millennials and Gen Z are investing in the market in ways their parents could have never even dreamt of.
That is sort of key when we talk about the divide between older and younger generations, is that the younger generation is exposed to so much more information and tools at their disposal to do what they want in the market.
The older generations, you never had the technology or the cost structure that you could play the markets like you can today. So you were stuck with giving your money to a professional investor and paying them a fee to do it.
When I speak to young kids, they tell me, I'm making mistakes, I'm losing money. I'm not a perfect investor, but I'm 18, and by the time I'm 30, which will be, 10 years from now, I'm gonna have interacted with the markets for a decade. And so it's a learning experience more so than anything else.
And you can look at it and you can say, wow, that's risk-taking, that's dumb, but if you could possibly shave 10, 20 years off your working life versus adding 5 years, I don't think you can fault people for that.
But Robinhood is only part of the puzzle. Sure, you can trade on it, but without research, information, and data, you're just blindly throwing darts at different stocks and hoping to strike it rich.
Wall Street forever has always run on what we now call narratives or memes. People telling rumors to each other have been around for 100 years.
On Wall Street, information is its own currency. Historically, either you had it or you didn't, and the people who had it had a huge advantage.
In the past, those narratives and memes didn't have a network effect. It would be one person telling another person over the phone. In fact, when I broke into this business in the 80s, a lot of people used to complain that they weren't on the call list to get those ideas.
Social media changed all of that.
Fast forward to 2021, that's being done on the internet now. And that's being done on Discord and Twitter and StockTwits and Reddit. And the impact is very similar, but orders and orders of magnitude larger.
As social media has played a bigger part in our lives, it's also played a bigger and kind of more important role in how people find investing ideas online and on these platforms.
How do those ideas spread? On TikTok. Yes, that TikTok.
Soon may the weatherman come to bring us sugar and tea and rum.
People aren't just going to it for sea shanty videos.
The personal finance hashtag on TikTok has garnered 3.5 billion views from its 1 billion monthly active users. By comparison, videos found under the cooking and health tips hashtag have 2.6 and 2.1 billion views respectively.
The trajectory of Robinhood and TikTok were literally on par.
What happened in the stock market this week? So the word of the week is expectations.
Absolutely essential that you guys understand the risks of shorting.
And Kayla Kilbride and Kyla Scanlon are two of those financial influencer TikTokers, also known as finfluencers.
I think people still care about fashion, they care about culture, but it's also like there's this big behemoth thing called the stock market that we really don't know a whole lot about, and it's gatekept behind the industry. And so people want to unpack that. And so my audience is, a lot of them are younger investors who are looking to hone their skills.
Tech and write-up.
Kyla and Kayla are two of the more, let's say, professional TikTok influencers.
The Tesla ARK Bitcoin Biotech Risk Cluster.
I've been trading since high school, and it was a really interesting way for me to fill out my decision-making frameworks and to think about thinking. And I think that the more that we can have people thinking about finance, the better that we're going to progress as a society. I think it's a huge gap in our educational system.
If you're going to buy an option for a stock you think is going to go up, it's a call. So think of it like this. I made the options video where I was like, options are just like shopping. Rumor has it that this pallet's about to go up in price. So if I come in tomorrow, can I still buy it at said price? And a ton of women just attacked that video and were like, you explain things so much better than my boyfriend or my professor, or I could sit and listen to you all day. And I was like, this is what I was looking for.
But TikTok's algorithm does not reward calm and measured videos about responsible investing. It rewards this.
Watch this video for 30 seconds and you'll be rich for the rest of your life.
I try not to say the A word, the ALGO word, because TikTok listens to us. The algorithm does impact how you feel. You know, you do notice which videos do better versus which videos do worse. How do you catch someone's attention in less than 60 seconds? And how do you make it something that they're like, I need this in my life? Nearly impossible to do that in 60 seconds. But the people who perfect it are the people that you're going to watch and going to stick around.
And where people are sticking around? Reddit. And its nearly countless subreddits about finance. And by far the biggest one of those is Wall Street Bets.
There's a lot of social media platforms out there, but Reddit is like the social media platform for finance. Places like Wall Street Bets is where it all goes down.
Started in January 2012, it wasn't long before Wall Street Bets adopted a 4chan-like etiquette, leading to their tagline, like 4chan found a Bloomberg terminal.
We had all these unexplained stock moves, and we would be grasping for why stock XYZ jumped 20% in a day. And you would look at Wall Street Bets, and you would see people there talking about buying options in that stock, and it sort of, you know, squared the circle, so to speak, and started making sense. And it was at that point that it was like, wow, we have to start paying attention to this.
Some people on the platform really spend tons of time, and others are just looking for entertainment and to have a little bit of fun, effectively gambling or looking for an outlet, trying to make a little bit of money.
Then on top of all of that, there were stimulus checks. Now, clearly this money is going to people who need to use that to eat, to live, but there's a lot of people who use this money to invest in the stock market.
And it's not just stock tips. People quote-unquote YOLO their entire life savings or stimulus checks on a single stock. They post what is called gain and loss porn, screen-grabbing staggering hits and misses on stocks for the entire community to see.
I'm about to lose everything.
And while some of the people on Wall Street Bets are novice investors, the community contains multitudes.
In one respect, what it did show us among these network groups is they are very sophisticated. They're not a bunch of ignorant people talking to other ignorant people.
And this is where the pieces of the puzzle all come together to wreak havoc on Wall Street for a solid week in early 2021.
It's pretty clear that the combination of more people having retail brokerage accounts and trading apps and more people being stuck at home looking for some kind of entertainment and some kind of community online came together in this very singular way.
What came together is GameStop.
Let's go back to the beginnings of what happened with GameStop a couple of years ago. On the boards like Reddit and StockTwits, a lot of people were talking about GameStop as being attractive value.
Some of them are even, Wall Street alums who left the industry and now still have access to tools that they can use to improve their financial well-being and make very good decisions. And I think Roaring Kitty is a perfect example of that.
GameStop is one of the most compelling asymmetric opportunities in the market today. Really, I don't understand how you could disagree with that.
At the same time that this crowd was talking it up, the hedge fund institutional crowd didn't like this stock at all, and it had the largest short interest of any stock in the New York Stock Exchange going into late 2020.
Short selling is a bet that a stock price will fall, and it's a fairly simple concept. An investor borrows a stock and then sells it. The investor is betting on buying the stock back later for a lower price before returning it to the original owner, pocketing the price difference.
What a short seller would tell you is that they almost act as a policeman in financial markets, or they're at least looking for companies that aren't what they say they are. And that can range anywhere from an outright fraud that some short sellers try to expose to just a company that's not worth as much as investors think it is.
The problem is, if the stock price rises, the short seller has to come up with the money to buy the stock back. And the more it rises, the more it costs. And that's what's called a short squeeze. And the hedge fund Melvin Capital was on the wrong end of that squeeze.
Melvin Capital lost over 50% of its money in the month of January alone, just from being caught in the short squeeze of the stock.
This is where the disruption comes in.
One of the most wild stories you're ever going to see. GameStop shares absolutely going nuts.
In less than a year, the company's stock has jumped from less than $3 a share to almost $350.
Cheers, everybody!
Roaring Kitty has turned $50,000 or so investment into some $14 million. Whoa!
Investors all over social media use the free trading app Robinhood to wreak havoc on Wall Street.
They're actually piling on into some of these stocks to really hurt the professional short sellers.
And they all used Reddit, Twitter, TikTok, and Discord to tell one another to keep buying and, quote, hold the line and not sell GameStop.
People are getting cheerleaded for jumping in, buying at the highs. They're saying, keep going.
And it was working too, until
Thursday morning, the trading app Robinhood sent out this tweet. In light of current market volatility, we are restricting transactions, including GameStop.
People were really angry.
Robinhood was supposed to allow the regular people to play the same game these big boys are playing. But instead, we were all taken for schmucks, and they screwed us.
Shares of GameStop are jumping again now that retail investors are being allowed to buy shares of the stock.
But what we learned is that when people organize online, they have the ability to disrupt the market.
And it was a big sign. The ivory walls of the institution aren't as powerful as maybe the institutions thought them to be. I don't know if pumping up GameStop was the best use of billions of dollars, but I think that as a signal to society, it was pretty interesting and powerful.
the GameStop saga was so impactful that both Vlad Tenev and Roaring Kitty were called in to testify before Congress to clarify each of their roles in the saga.
One thing that's emerged from the congressional hearings is that they're interested in how retail brokerages make money and whether they're keeping the best interests of their customers in mind, but it's pretty fuzzy as far as what they would actually do as a result.
While the frenzy around GameStop eventually subsided, it didn't take long for retail investors to find other areas to invest their money.
Take a look at Bitcoin going bananas over the weekend.
Bitcoin forms a brand new all-time high.
It was after GameStop started to drop that we saw Bitcoin really go up to over 60,000.
How much further does this rally have to run?
It's compelling to say that money shifted from one venue to the other.
While correlation doesn't equal causation, there's a chart out there showing an inverse correlation on meme stocks going down and cryptocurrencies going up.
There's definitely an aspect where people are making money on stocks and then moving, they're agnostic, they're not hedge funds. They can invest wherever the hell they want. It's a classic sort of momentum trade. They're going to wherever the winners are and they're willing to jump on and, ride it.
So whether it's meme stocks like GameStop, meme coins like Dogecoin, or entirely new ways to invest in art like NFTs, the new kind of retail investor is making its presence known.
Over the next 10, maybe 15 years, you're going to continue to see, whether by choice or by force, that baton go from older generations to younger generations. I don't think any single app is going to be the thing that disrupts. I think people are the disruptors.
How people get ideas about what to invest in has become increasingly entwined with social media. And as social media companies govern more and more of our lives, the fact that now they're tied in more intimately to people's wallets is something that we might want to understand better.
Usually what disruption, I think, means is technology comes in, whether it's blogs to the newspapers or online retailing to brick and mortar. They come in and they're in the same business, but they just do it in such a gigantic cost savings that it causes everybody to switch. Well, that's the risk that happens here, is that it's so much cheaper to just manage your own money. We're not there yet, but costs and conveniences are moving in that direction. So I'd say, Wall Street, you haven't been disrupted yet, but you could be in the coming years, and that the final chapter on this story hasn't been written.
Bloomberg's own David Nicholson. Now, his happy place is out in the field, on the open road. But like the rest of the world lately, he's been working from home a lot more than he's used to. COVID-19 has prompted a massive urban exodus as professionals of every ilk yearn for more space to live and work. As a result, rural areas have exploded, and they're poised to experience a resurgence as more and more families pack up and leave the big city to try out life in the burbs. But there's one problem with that. Not all internet speeds are created equal. Anyone who might need to upload or download large files for a living may not want to pack up and move to that cabin in the woods just yet. Now, David's house isn't a cabin, but it is in the woods, and inexplicably, his internet is workable.
My internet is okay. I pay a lot for it. It's around $140 a month. The download speed's great, and the upload speed is terrible, which is really bad for my work because I have to upload these massive files. But I'm definitely one of the more lucky ones in this community. Just a few miles down the road, my buddy has awful internet.
It's usually under 2 down and under 0.2 up, so it's often unusable.
Some days it's around 1, and other times it'll drop down to about 0.2, 0.3.
I just want to be able to have internet at my house without having to go outside the normal ways of acquiring internet. It's really frustrating.
We're literally miles, a few miles away from downtown, and it just cuts off.
This is a problem, and the solutions are not there yet, because getting high-speed internet in rural areas en masse is something our providers may simply not be ready for.
If your internet service doesn't have fast download and upload speeds, then you don't have high-speed harmony. You have.
Americans on average pay about $70 a month for internet at home. But in rural areas, it could cost a lot more for a lot less service.
So the pricing for a fixed wireless provider here can be something between $80 and $150 for about 25 megabits per second. However, gigabit service, which is 1,000 megabits per second and symmetrical, is running at about $119 a month or $130 a month.
That's John Paul. He co-owns Spiral Fiber, an internet service provider here in Nevada County, California. And for the past 10 years, he's been trying to bring an affordable fiber optic network to town. It all started when he applied to be part of the pilot program for Google's fiber service.
Across the country, civic boosters have been going to extremes, chanting, singing, Google in the morning, and marching, trying to get the search engine giant to look at their town.
The internet these days is crucial to be in the world, to be a part of the world, and to be connected to your community.
Google ultimately went with Kansas City, Missouri, which left Paul on a mission to get funding to lay out fiber optic networks for gigabit service. Over the next several years, he would attend conferences and pitch venture capitalists and apply for grants to make his vision come to life.
One of the biggest roadblocks to building infrastructure for the internet here in the United States are the existing large providers. They have their land staked out. They would prefer that nobody come in and compete against them. In 2013, we applied for a grant. We went down and met with the commissioners at the California Public Utilities Commission. It was an arduous process to get funded, but we finally did against all odds. We got a $16 million grant, and then we went out to seek venture capital.
Then, in March of 2020, the pandemic hit the world.
Everybody got locked down, and everybody came home, and everybody started using the internet. And I remember seeing on one of the local fixed wireless providers' websites, they've said, hey, we know you're all staying home, but please don't use too much video, and please don't use too much bandwidth. And I thought, that doesn't work.
The U.S. connectivity gap is far greater compared to countries that are considered its peers economically. Some developing nations actually have better internet than rural America, like in Kenya, which has a state-of-the-art fiber optic network fed in from their coastline. The American connectivity gap does largely affect rural areas that are either outside of service coverage or simply prohibitively expensive. This is Rebecca. She and her family moved to Nevada County just a couple miles down the road from David. They took for granted that high-speed internet would just exist in the area, and it's not something they even bothered to check on before buying their house. Turns out, all they got was dial-up.
We wanted to move where we had a little more space, room for the kids to run around, just be out in the mountains a little bit more. Having come from a bigger city area where Wi-Fi is pretty readily available, we hadn't really considered that in our purchasing of the house, whether that would be an option or not. When school started, and now that we are remote learning with our children and we're doing everything from home, we didn't have the option to do that at our house. So every day when school would start, we'd have to pack the kids up and we'd go to my in-laws' home. They have a little cabin up in this area that does have Wi-Fi already.
Rebecca's situation is the norm in rural America.
According to data from the Federal Communications Commission, just 4% of urban Americans lack access to broadband internet. That's compared to almost 40% of people who live in rural areas. But while that was the case, there were also racial and socioeconomic divides in terms of who had that access. In addition to that geographic difference, low-income African American students, Latino students, and first-generation college students were more likely than others to have only one device at home that's shared among multiple siblings and or lack access to that actual connection.
For most American towns, there's also a lack of competition, forcing internet prices up. And large providers like AT&T and Comcast aren't incentivized to expand service to these rural communities.
This is how Xfinity makes life simple, easy, awesome.
So in our area, we have a small imprint of Comcast, but they're not going to go out to the more rural areas. It's just not cost effective for them to do it as a large company.
In order to lay fiber cable, you're actually physically digging trenches into the ground. And for internet service providers, they're primarily focused on maximizing their profits. And so the fewer customers you have, in any square mile and the more fiber you have to lay, that's just kind of harder to pencil out from a purely economic standpoint.
AT&T released a statement on the matter, expressing the need and desire for government assistance to fund fiber optic expansion to areas deemed unprofitable. Comcast released a similar statement encouraging more public-private collaboration on this effort. Federal agencies do offer grants to help communities build broadband networks, but many have argued that there's not enough flexibility on how to use these funds. The COVID-19 relief package passed by Congress in March and signed by President Donald Trump awarded $43.3 million to 51 projects on the East Coast alone. But it also stipulated that these projects needed to be up and running by December 30th. For contractors who plan projects months and years in advance, it's a scramble to rearrange their schedules to meet that deadline.
So what we've been asking the federal government to consider is at least have, as long as the projects are getting started, knowing the projects are being put into place to expand both remote learning, working from home, and opportunities like that that are truly driven from COVID. We're moving as fast as we can regardless, but hopefully they'll give us some more time.
Talking to John Paul, it's clear that he believes broadband is something that can transform a community and should be considered a public good.
One of the first communities to come on in the United States with full-on gigabit service was Chattanooga, Tennessee. Now, they're a bigger city, but they're a city that was economically in a downturn. In the last 15 years, the city of Chattanooga has turned around in an amazing way. It's a nexus for young people to move to. It's a place where technology happens.
It's not just about logging on to Zoom, to connect with your colleagues who might be in New York City. It's also your ability as a small business, operating in the town of Nevada City or wherever it may be to, quickly upload your payroll documents or something onto the cloud or to quickly, swipe a customer's credit card. There's just some really basic business functions and mechanics that I think people in big cities really take for granted and that are just going to be a much bigger challenge for small business owners in rural areas.
Historically, the marginalized people, you call them as untouchables or Dalits, they have been kept away from the center of the knowledge. Once you are born into a caste, it is very difficult for you to grow beyond that. You are stuck in that identity. Education is the best way of liberating them. So that's how I chose to work in education sector. The kind of education that we are giving to the marginalized people is going to change not just the fate of these communities in Telangana, but it is going to be the source of inspiration, source of hope for all the marginalized in this country.
Greatest blight in India is the system of caste.
For generations of Indians, the social code known as the caste system has defined how people earn a living and whom they marry. Although outlawed 7 decades ago, castes remain a significant factor in deciding everything, from family ties and cultural traditions to educational and economic opportunities. Dalits, people who are on the lowest rung of the caste system, constitute almost 1/5 of India's population of 1.3 billion. Not able to afford the high tuition of private schools, many are forced to attend government-funded institutions, which in the past have suffered from poor infrastructure, lower education standards, and high student-to-teacher ratios. But Dr. Praveen Kumar is trying to change that.
I am currently working as head of Telangana Social Welfare Residential Schools. So totally above 400 schools I manage. These are all residential schools for the students who are historically marginalized but talented and then poor.
My friend also
Of them, 60% are girls and then 40% are boys, because girls are more marginalized among the marginalized. Their voices are always suppressed. My approach to improve the conditions in the schools has been put your eyes and ears on the ground always. Talk to the parents, talk to the teachers, talk to the students, stay in the schools and then understand their problems, their challenges, both in classrooms and then the corridors and the dorms. Then go to the dining halls and see what kind of food they are eating, and then go to their homes and then what kind of food they are getting and what kind of challenges the parents have. One of the important changes that I brought in after I took over was to complete the transformation of mother tongue to English medium, because English medium, as I said, English is the language of emancipation. A language that connects you to the whole body of knowledge in the world. So we had to train a lot of teachers.
Refer to the dictionary also, okay, and find out the new meanings. As well as describe about. Hey, Richita, how are you? Hi, Sindhu. Fine, thank you. And how about you? I'm fine too. It's been a long time.
Identity is extremely important. There is a scientific evidence to prove that your sense of identity is extremely crucial to your growth as a successful human being in your life. If you accept an identity which is very humiliating, which reminds you of very painful past, I think that identity will not help you to grow. I'm not saying that you should forget your past. I'm not saying that, but that should not be the bubble in which you must live always. Sweros is an alternative identity. S stands for state, W stands for welfare, Aero, SW and then Aero is Swero. So the idea is your dreams have to be skybound. So that is what we are trying to achieve by changing the identities. Like, you say, I'm a Swero and I aim to be a doctor. I am a Swero, I aim to be a top-notch engineer. I am a Swero, I aim to be a top bureaucrat of this country. I'm a Swero, I want to be a very good actor or a musician in this world. So these are the positive images that are associated with the identity. Just to give an example to you, in 2012, in our institution, we used to produce about 6 doctors per year. But because of our, this self-liberating ideology of Sveroism, we have, this year, we have produced about 189 doctors. This is phenomenal for any poorest of the poor people. You know how difficult it is to get into medical colleges in this country. So, but today, because of this ideology, the students have been able to achieve this, feat. Pujita has been a farm laborer, and her parents themselves are agricultural laborers. And then this girl used to sell vegetables, but thanks to the residential education institutions, she came to the Gauli Doddi campus, and then she toiled very hard for 1 year, despite many problems. And today, I'm so happy to share with you that she has joined one of the prestigious medical colleges in the state of Telangana, Usmania Medical College, and then in future, she hopes to be a gynecologist. So this is the journey our children are hoping for. Similarly, the Mount Everest expedition. At Mount Everest expedition, we are very fortunate enough to place the youngest ever female in the history of this world on the peak of Mount Everest. How did this happen? It's all because of an ideology that helps you to liberate yourself. We brought a lot of extracurricular activities, and most of them got institutionalized now. So, for example, music. Similarly, the games. We have so many coaching academy. We have boxing academy, we have wrestling academy, we have handball academy. So we have, kabaddi, the traditional Indian sport. We have golf. We have introduced the golf also. Like golf is generally played by so-called rich people, but today even poorest of the poor people also are being trained in golf in our schools. Wow. So our intention has been to give all 360 degrees, type of opportunities to the students, so that whoever is interested in whatever activity, they can go and then do it. Break the barriers, break the fence, at least mentally, because poor people have been programmed to be victims, programmed to be subjugated, programmed to be on the margins, always, programmed to feel inferior. We wanted to change on that. There are certain games which are exclusive to rich people. There are certain languages which are exclusive to middle class and upper middle class in this country. To put it in one word, the sole aim of introducing all these co-curricular activities is to break the stereotypes which are recklessly imposed on these people.
Their stereotypes Dr. Kumar knows all too well. Born a Dalit, his grandparents were labourers and access to the village well was restricted. Dr. Kumar credits his parents' belief in the power of education with helping him realise his aspirations. He went on to join the Indian Police Service, attended Harvard University, and then began pursuing educational reforms back home.
I attribute whatever I am today, it's to my mother primarily. They educated me in the village, although there were no good schools. So then I stayed in social welfare hostels, the hostels which are managed by government for the poorest of the poor kids. I passed with reasonably good grades. Then I went to university, and then I faced worst form of discrimination in the universities. Like there were, in those days I'm talking about, so the bathrooms and the toilets were exclusively meant for scheduled castes and scheduled tribes. We used to fight discrimination on one hand, and then again, try to excel in academics, day in and day out. So that's how I came to education, because I deeply believe that education is the only important weapon that can really, place the poorest of the poor people from a very victimhood orbit to prosperous.